Good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor. Well, the day we've all been waiting for is here. And where's it going to end up at the end of the day? Well, I can promise you one thing. I can promise you drama. I can promise you excitement. I can promise you money-making opportunities, volatility, the whole works. CPI rate came in interesting today as well. PPI, I beg your pardon. Let's go over to it now. This is very important this morning. This is very important information as well. So PPI, month on month, producers' prices for final demand in the US decreased 0.3% month over month in May, following a 0.2 rise in April, and compared to the market forecast of a 0.1 drop. Good prices went down 1.6%, the largest decrease since July 2022. That's great information. Let's look at the core now. The core unchanged, and the core PPI year over year is down from 3.2 to 2.8. That's quite a drop. I beg your pardon. I love the way they get these adverts in. I wish I could sort of get around it, but there you go. Core producer inflation in the United States decreased to 2.8% in May, the lowest since February 21, and below market expectations of 2.9. All this is indicating to a pause. I don't see a pivot on the cards. We want to be responsible. We don't want to suddenly send the market into a massive great pump. Oh, I mean, it sounds great, but it's not. It's not what we want. It's not what we want. We want steady growth, not explosive growth, and then tomorrow we lose it all. And of course, if you sell it off, that's fine, but got to be very careful. So hopefully you've made your positions today. Hopefully you've taken your profits. I have. Let me show you what I did. I sold all my AI. This was my AI. I sold it at the top. Here it is. Here's my AI. I made 38% the first time, 38 again the second. So the second time was 70% up. I've sold it. It's massively overbought. Massively overbought. This is a huge lift. And I don't care if it carries on going. If I can make 70% on a stock, I'm out, I'm done, I'm happy with that, because it's not making any money. If it was making money, if it was Apple, if it was Tesla, if it was Microsoft, if it was Google, different Coca-Cola, J&J, I'd keep it, but it's not. So I've made some money on it, I'm out. What else did I sell? I sold the S&P right at the top. I sold it for 404. Right up here, it's not. Why is it not showing 404? That's 404 there. Anyway, whatever. I sold it for 404. There you go. 403, 404. These charts don't give you all. Don't give you all the detail. And I trim back, and then that money has gone into my buying power. So I've got cash on hand, 3,333. Now you can see how quickly you can make money, because Robinhood pay you every day, not yearly like the banks, every day, or monthly like the banks, every day. You can see yesterday I was at 75 cents. This month I'm up to 86 cents. So it's moved from 75 cents to 86 cents in less than 24 hours. So you can see once that fully registers, that $3,000, I'll probably be at $1 tomorrow. And you might go, well, who cares? It's free money, and it's free money earning 4.65% when the market's going down and I've already made 13% on the top. So why not? I mean, then there's no risk, right? Then if the market drops today, I can buy a massive dip. And it have to go down quite a lot for me to buy it back, because I want that money to pay for my new computer. So you have to go down by quite a bit to entice me in. That's why I sold it. So who have we got here? Hello, patiently waiting Catamaran, welcome to you. We have members now. We have the highest engagement rate of any channel on YouTube. We have 95% of our live viewers who are members, more than Mr. Beast, which is 8 to 9%. I'm pretty happy with that. And here is our flags. We have members now in 18 countries around the world. If you are not represented, Chile, USA, UK, Australia, Turkey, Italy, Ireland, Portugal, Uruguay, Canada, Uganda, Lebanon, Norway, South Africa, Argentina, Germany, Dominican Republic, and Mexico. If you're not represented, fly the flag for your country, become a member, get all the inside information, hear what we're doing before we make any announcements. announcements in the morning. We start researching at 3 a.m. for you for our scalp trades. And you can benefit from all of that information. Become a member. How do you become a member? Well, here is the membership link. I'm going to give it to you right now. Here it is. Become a member and get 20 times back what you put in. That's why everybody here is a member. In fact, 95% of my live viewers are members. There you go. T.O. Roll, we're hanging in there, waiting for good news on our money. What would you expect from the markets with a 0.25 investment rate? Do you mean interest rate increase? There's not going to be a 0.25 interest rate increase. If that happened, the markets would drop because it would make no sense, and that would be very hawkish. Every indication is there. But remember, the important part is, it's not what the rate is. We will know in just a few minutes' time, 20 minutes to be precise. There's no point in getting all excited about the rate. You need to be excited about what he says towards the end of the meeting when we go into the conference, the press conference. That is when we find out what comes next. The markets already know where we're going, or they don't know 100%, but we've got a bloody good idea. We want to know what comes next. That's what determines the market. At the end of the meeting, when he starts speaking and talking about where we go in July, that's when the markets will dramatically swing. Yo, said Zach. Good afternoon, Cherry. I missed this morning's show due to no internet connection where I was working. Oh, we missed you, Cherry. Lovely to have you here. We had a scalp trade this morning, but it was a bad one. We took our loss. We got out of it quite quickly. So probably a good job you didn't join in this morning. Actually, you saved some money. I lost about $30, but there you go. I got out very quickly. Well, I say very quickly. I was in for about an hour, I think, something like that, which is pretty slow for a scalp trade, but quickly when it compares to the day, I suppose. Anyway, Virgin Galactic was flying today. We had Virgin Galactic in the air, and of course, we get the false information shared on my YouTube, on my account. Oh yes, straight away. We got this. So I'm going to share with you on the screen just to alert everybody. This is the sort of stuff I get. Okay. So we've got a trader here put on a chart, tagged me in it because he wants me to promote it. Well, I promoted it all right. Welcoming Italian Air Force commercial flight. Well, we haven't got a commercial flight yet for the Italian Air Force. It's supposed to be coming this end of the June. No announcement yet, unlike some YouTubers who said the 25th of June, and we found out why. They made it up because they saw it on a Reddit post. Where did the Redditor get it from? We found out where that came from on the homepage of the YouTube channel, on the homepage of the Virgin Galactic website. It says a word and then 25, and if you translate that word into certain languages and allow for a spelling mistake, it means the word June. So they took that as June 25th, told everybody, put it on Reddit. Some 3 YouTubers who will remain nameless decided then to start posting that to the June 25th. And then we have this today, welcoming Italian Air Force. And I just want to say, we are expecting the Italian Air Force, but we have no Italian Air Force. So I replied, no flight confirmed yet. Just saying. So people are using me any way they can to promote anything they want. Well, don't do it, because I'll call you out on it. Because I don't care about your post. I care about my members. Okay? I care about the truth. The moment we start lying, the channel goes down the toilet. All right, we're not doing that for anyone's benefit. Yours, mine, or anybody else. Good afternoon, everybody. What a day for space. Yes, indeed. We had the flight this morning. Agent Shu, did you see it? And yes, it was a test flight. It wasn't Italian Air Force. Someone asked me the question, how do you know that Unity is not attached? And I gave 4 reasons. In 4th place, the most unreliable is Virgin Galactic announced their flights. They don't announce test flights, but they're unreliable, so I can't take that as 100%. However, they do announce flights. They don't announce test flights. In 3rd place, we know that the airspace would be shut down, and the airspace was not shut down. If you've got a rocket attached to your plane, you have to shut down the airspace. The airspace was not shut down. I can't remember what second is. In first place, the most obvious way is, first of all, you can see on the radar when the transponder is turned on, there are two planes together side by side, and you can see that, and that was not there. So there we go. There are a number of reasons why we know that it was not a flight today. However, it was a test flight. They were doing loop-de-loop, and we had a lot of fun with the loop-de-loop this morning as well. All right, FOMC around the corner. Okay. FOMC around the corner. We're watching Virgin Galactic. We're watching the S&P. We're watching Tesla crawling along today. Did you sell it? I didn't. Mullen, disastrous, going to zero. Absolutely disgusted by Mullen. Has anybody still got Mullen, by the way, holding for some hopiary like I am? Hate it. I hate being manipulated like that. Anyway, there we go. Amazon down 0.62. McDonald's, land. Can't go wrong with land. Why is Coke up today? Safe, because a safety net if we get a shocker. Not only that, everybody's getting in. It's perfect timing because tomorrow is ex-dividend date. So you can't buy enough Coca-Cola today. But bear that in mind. It's a 46 cents a share dividend. And we're up more than 46 cents today, and it will drop when it passes the date when you've got to hold the stock for. So you can't buy it now. If you're thinking, well, I'll buy it now, I'll get a 46 cent dividend. Well, you will, but then the stock will go down. There's no point. You should have bought this yesterday. As you can see, I've already got it. Okay, it's 8% of my Roth IRA, and it's 6% of my main account. Plus, I own it in the S&P. So you don't buy it now. All right, don't buy it now. Ripple XRP is down. We're being disappointed about that. Polygon. This is one of my favorites. Again, I buy assets with use cases, so I make money even if I don't make money. Polygon is the cheapest way to move crypto around. I use it for my Ethereum NFTs. I use it to transfer from wallet to wallet. So when Polygon went down the other day and a load of YouTubers like BitBoy and Cryptos Are Arse basically talked rubbish, they said, and I couldn't believe it, but it sells them videos. I'm about going live, building an audience. They're about making money on videos. They said that Robinhood don't understand the crypto community. They dropped it on everyone. They got rid of it off their platform, so it went down 38%. And selfishly, they're reporting that as Robinhood's failure to try and gain views. Well, they got views. They earned money. Good for them. But what I did, on the other hand, is I bought everyone's Polygon when it went down 38%, and I've been up ever since. I keep making money on Polygon. Why did I do that? Well, look, here it is here. This is it here. I bought it down here. Went down 38%, down here. And it's been going up ever since. Why did I buy it? The reason why I bought it was because it's going to go up from here. It's the internet currency for NFTs and Ethereum. And it could become one of the top 10. And when it's 38% discount, for the reason that Robinhood dropped it, and they did it for the right reason, and they tried to say Robinhood don't care about the community and started talking about GameStop. And I love when YouTubers talk about GameStop, because straight away that tells me they don't understand about investing. They don't care. They don't understand investing. They're just very good at selling rubbish for YouTube videos. The reality is Robinhood is going to 10x, and Robinhood cares about one thing and one thing only. It's business. And its business is my business, because my business is owning Robinhood and also a brokerage that makes money, right? It doesn't make any sense for them to hold onto a crypto which other brokerages are also getting rid of, but they don't get the bad publicity because they don't get associated with the GameStop, even though they did the same thing. All brokerages halted, otherwise it'd be a bank run. Robinhood gets the young investors that watch these YouTubers, so they talk about it. Robinhood's going to be a 10x, going to be a $90 stock. So I own Robinhood, but I also understand that Robinhood know how to make money, and they know how to make money on the markets as well. So they did the right thing, getting rid of a volatile stock. So thank you very much, Robinhood, for driving the price down, because I bought it, and I don't care if it's delisted from Robinhood, BSV, different. I was buying it for an investment, and I didn't want to show it if I could. I didn't want to own it if I couldn't show it. My Polygon, I don't even show you it. I mean, I'll show it if you want. It's in my wallet over here. Look, it's in my Robinhood wallet. I don't even show you it. Here it is. I started out with was it $100? Was I on $100 last week? Look, I'm up to $268 now. I keep buying Polygon whenever it goes down because it will pay my gas. I mean, $268. You go, well, that's not much. 268 a Polygon. You only use like 1 cent of Polygon to move something. I could do 1,000 million NFTs and wallet transfers with $268. So I don't need to own lots of it. Anyway, that's why Polygon went down, and that's what everyone reported, which was rubbish, but it got them views. Because as we proved on our channel before, bad news gets views. Either Bitcoin's going to $1 million today, that gets views, and it's going, Robinhood is a scam, and it doesn't appreciate the community and makes everybody feel negative. That gets views. Well, that's not the reality at all. Robinhood did the responsible thing, and I'm all for that because I own Robinhood. I don't want Robinhood to do silly things. Anyway, Robinhood are a bit smarter than Ben and George from Cryptos R Us, I think. But you decide. Okay, so dumb question. How long do I need to hold stock after I see a dividend pending on accounts? It's not a dumb question. You have to hold it. What is the date now? You've got the ex-dividend date. That's the day you've got to be in, and that's settled funds. Don't think you can buy on the day. And you've got to have settled funds. Normally it's like 2 or 3 days. And then you have to hold until I think it's the announcement. You have to hold until they announce the payout. I think that's right. I've forgotten now. Honestly, I've forgotten. I think it's that you have to hold until the announcement. Yes, that's right. You will get an announcement, Zach, when they've announced. You will get an announcement. Something like this. I wonder if I can share with you. I'll share with you this. I think I can share this with you. History. When I say I think I can share it, I don't want to show my account number on the screen. Okay. History. Right. Okay. Okay. Here it is. This is what I wanted to show you. So once you get, there you go. Once you get this notification in your account, Tesco dividend, right, pending. McDonald's dividend pending. See, I'm earning $13 from NEE. See, McDonald's is $4.64. When you get that notification, you can then sell because it is accepted that you own the stock on the day and you're going to get your money. The moment you get that notification, you are locked in. You can sell the stock. What I tend to do is keep at least one share so I can see it. If you sell it all out, it doesn't display it very well. I like to keep one share. I mean, I don't sell out anyway. I just reinvest the dividends. I don't sell the stock anyway. Dividend stocks, I just reinvest them on the down days. But I very rarely. I just trim off the top for like source of funds. But yeah, once you get that notification, you are good to go. You can then sell it because it's already locked in that you're getting that money, and that tends to be when the share price goes down as well. So you could be the first to do that. McDonald's, okay. Do we know why Nicola is up so much? No, I don't follow the stock. T.O. Rom, sorry, I don't. Down 0.6. T.O. don't know. McDonald's shows if you want to cross-check. McDonald's shows if you want to cross-check. What do you mean McDonald's shows if you want to cross-check? Oh, yeah. Yeah, you're right. June 20th. So the moment that this became available, the moment that this said pending, then that's it. That's the day I can sell it. I'm going to get that 15 cents now. I'm going to get that even if I sell the stock, okay? 10 minutes ago before the announcement, if you've just tuned in, welcome to you. Pete Barker, in the past, Virgin Galactic, the PR juggernaut, around a week before they launch Unity, so I'd expect news to be released this weekend. Pete Barker, I'm going to challenge you on that. I don't think Virgin Galactic is the PR juggernaut that it used to be. In fact, I'm going to say it's rubbish. It's rubbish. The PR Virgin Galactic is rubbish. Now, you might go, well, it's got a nice website. Whoop-de-doo, I've got a nice website. How come I rank higher than them for Virgin Galactic? How come I rank higher than them for SPCE? How come I rank higher for them than the Virgin Galactic song? How come 18,000 people watched my live stream of the last test flight and they didn't even broadcast it? No, rubbish. Virgin Galactic juggernaut, my ass, they are rubbish and they need to be better. They need to be better. If I was on the board of Virgin Galactic, I would fire the marketing team. All they are doing is relying on Richard Branson popping in, very recognizable character with his white hair, and waving. That's about it. Virgin, I'm sorry, if that upsets anybody, that's not good enough. It's not good enough that you do a couple of tweets and Richard Branson flies in. It's rubbish. Richard Branson now has got a very negative... a lot of negativity towards him because you all know about the Matthew Brown situation when there was a deal on the cards and Matthew Brown was going to buy. Remember, I was in contact with Matthew Brown. They had a deal on the cards to save Virgin Orbit. Richard Branson stopped the deal. He stopped the deal from going through to get preferred stock to make sure he got Cosmic Girl back out of the deal. He was the only one who got that. He got a 13% benefit and his Cosmic Girl back. So he got his money. And that's his fourth business in a row to go bankrupt. So, and when he appeared on the tarmac at the last flight, he was on Twitter and he wasn't waving and getting excited. He wasn't waving and getting excited because a lot of people are very angry with Richard Branson. 4 businesses in a row to go bankrupt, doesn't do any marketing anymore, doesn't comment. All he does is fly in and wave his hands. So, I mean, you know, I don't care if I've upset anybody on that, honestly, because I only care about my viewers. I only care about my members, okay? I'm just telling you how it is. Anyway. Robinhood was my first ever trade using Robinhood brokerage a couple of years ago. Bought the dip at 33 and sold at 78. Beginner luck. Dennis the Menace. Welcome to the show. Okay, gotcha. Thank you, mate. Hi, friend from Czech Republic. Czechoslovakia. We do not have a member from Czechoslovakia. We've got 7 minutes to go before the announcement. 7 minutes to go. Look, here's our community. We do not have the Czech Republic. You would be the very first person to be a member of our channel from the Czechoslovakia Republic. I've been there. The Czech Republic is a wonderful country. If you did become a member, you get 20 times back what you put in. We'd give you a massive welcome. And you would always know that you own the flag, like Peter owns the clock, and everybody knows who was the first to get their country. And tell me what language you're speaking, and I will speak in your language. I speak in all the languages here. The PR wasn't so bad in 2021 when they were hyped. I don't agree. I think it should be. I mean, Elon Musk knows how to hype. NASA knows how to hype. SpaceX, Tesla, these companies know how to hype. Rocket Labs know how to hype. Virgin, rubbish. Okay, Pete Barker says 100% agree. Good. I think Richard should be out of Virgin. If he actually left Virgin Galactic, it'd be a good thing. Become a member, says Eric B. Right, let's get ready to rock and roll now. We are just seconds away now from, well, we're 6 minutes actually, to be precise. So what we're going to do now is get back onto the S&P. The announcement is imminent. Now we're going to run the clock for 1 minute. I am not going to show you the FOMC report unless we get 60 likes in 1 minute. Are you ready? Let's go. 1 minute on the clock. We've got 84 people watching. We've had several hundred already come through the stream. Let's get 60 likes or there's going to be no FOMC report. Let's make some money. Let's make some money, folks. 84 watching. Share this out to everybody. 86 watching. We need 60 likes. 60 likes in 30 seconds. There it is. 29 likes. 30 likes to go. What that will do is to share the video out to more people. Come on, smash the like button. Do it. Let's get busy. You want to make some money? Share the positive messaging out and let's make some money. 86 watching, 34 likes. Come on, 20 seconds to go. Come on, 18, 17, 36, 37, 15 seconds to go. Come on, let's move. Let's move. Get everybody going now. 10 seconds to go. 10 seconds to go. 8, 7, 40. Come on. 5, 4, 3, 2, 1. 40 likes. Come on. There's nearly 100 people watching now. What's going on? Smash the like button. Let's tell the world that we got the FOMC report coming up in 5 minutes. And we all know how to make money. 45. Come on. We can do 60 dead easy. There are 89 of you watching right now. Look, 89 of you now. 44. Come on. Come on then, let's do it. I love it. I love the energy. I want energy on my show. Lazy people, go and watch BitBoy. Go and watch Crypto. Don't watch this. This is energy, right? Come on, 47. Right, let's get rid of the flags. Let's get back into the SMC. 49. We're nearly there. 70, 50. 10 to go. 10 to go. Kathleen Mola on Facebook. Thank you very much. 51. Oh, it's flying now. It's flying now. We're at 51 likes. There it is right in the middle of the screen. We should easily be at 60 now. Easily. Come on, people. Get busy. Let's get busy. All right, here we go. Now then, let's bring... Come on, guys, says the Queen of Self-Braiding. Smash the like. You sat there like lazy asses. What's going on? Right, here we go. The portfolio is starting to move. We're up at 0.28. Let's get into the position now to break the news to you. Here we go. FOMC. We're going to start listening in about maybe a minute or so. Remember, do not get too excited. Let's go from Czech Republic. Czech Republic, become our first member. Become our first member from Czechoslovakia and fly the flag for Czechoslovakia. Here is our position. We're looking at it right now as our overall position. There's our Roth IRA. We are at all-time highs again. We're just $30 actually off all-time high. We hit 58,000 today. All this from $5,000 live on the show. Okay, 2.5 minutes to go. 2.5 minutes to go. What are we at now? 54 likes. Okay, not so bad. Didn't make 60. I've no idea why. There's 84 watching. Let's have a quick look here. We're trying to get to 1 million views by our second birthday. 8,438. Rolling round. We're at 10,000 subscribers by August, and then we're going to do a fundraiser for our charities because we can give all the money then to our charities. Hi, Martin One Invest. How are you? Go, 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 go. 56 likes now. 57, 58. We need 2 more likes. Otherwise, we're not going to show the FOMC report. You're thinking, he'll show it. He'll show it, won't he? He'll show it. 59. No, I won't. I always do what I say and I say what I do 100%. I won't show it. If 100 people are watching and only 40 people can like the video, I won't show it. Don't test me, because I will. I'll just watch it on my own and you'll go, what's going on? We've done it. I knew we would do it. There we go. Fantastic. We've got 100 people watching right now and 60 likes. There we go. Thank you very much indeed. Okay, we're about to get the announcement. Now remember, this is not the report. This is not the report. We've got 1 minute to go. I'm going to bring on the timer. Remember, this is not the announcement. The announcement is what's important. Okay? 4, 3, 2, 1. Have you trimmed? Are you ready for an explosion? $5.25 previous. Is it going to be 5.25 again, which means a pause or a skip? Either way is good. If we go up to 5.5, all hell will break loose. 30 seconds to go. We go silent. We wait. 10. 5.25. We're looking for 5. 5.25. We do not want to see 5.5. United States rate projection longer reported 2.5 pre to 2.5. Okay, we're waiting for 5.25. It's a skip. It's a skip. Okay, we've got a skip. There is no rate cut. We knew that. There's no rate cut. Here it is. Let's go over now to Bloomberg, bring in some live data. It is... I've got the news before they have. Fantastic. How did I do that?
So watching the commodity space, the fact that crude continues to go lower again.
Look,
how much
under
is
69.
That? Yeah, exactly. Wow. Under 69 as people parse through some of the inventories that are picking up. We are about
I've already
to get
got the decision.
I've
beaten Bloomberg.
as they embark on a pivot point of potential
it's
inflation,
a skip.
disinflation, and then potentially
so the markets are going down. Did you take your profits?
After raising rates by 500
This is where we'll sell off to buy back.
Now with the latest, Mike.
We have a super hawkish skip.
There you go. I told you. I told you before Bloomberg.
At 5 to 5.25%. However, the new dot plot shows a new terminal rate of 5.6%.
Correct.
Which would be 225 basis point moves or at least 150. 12 of the 18 members of the committee see rates at that level or above. One sees 6.25%. 4 see rates moving up only 25 basis points, but only 2 see no change between now and the end of the year.
Okay.
In their statement, the officials say holding the target range steady at this meeting allows the committee to assess additional information.
Right, we've already got that. We were
for
ahead. We'll skip that because we were ahead. I could see that before Bloomberg. So basically, what I said was it would be a skip, and it was. And what that has done, that is now sent the markets down. They'll rebound later. It's what he says at the meeting. So I hope you did like I did this morning and take your money off the top. All right? Because now you can buy it back. You see now why I sold. I've now got 3,333. So now I'm if we can get it to drop, I'm going shopping. Yay! Is everybody going shopping right now? This is great news, good news, because we didn't get a rate hike. We've had now 3 meetings holding. We've got a skip, which is like a pause. It just means pause will probably come next time. It won't be a pivot, but it'll be a pause. And we'll be holding these rates all the way through until the summer next year. So fantastic if you are investing your cash like I am. That's not going to go down for another 6 months to 12 months. In fact, to 12 months, that's not going to go down. So you want to be trimming off the top. Last night, you knew this was going to happen. Now it can come down. Now you can buy the dip. You can then sell the dip when it pops on any level of news. Take your money back out. Make yourself maybe 1 or 2%. Put your money back in uninvested cash and leave it there. Leave it there because we've now got 4.65 for at least 12 months. This is great. So the FOMC report. The announcement will come in 27 minutes. That is more important than this. We knew it was going to be a skip. This is exactly what we planned for. Hopefully everybody made some money. So now let's go shopping. We've got 3.5 grand. So we want to buy back the S&P. How low can she go? Come on, take me back down to 380. Come on. Virgin Galactic, remember what I always said, will amplify the losses and the gains unless there's any fundamental change to the business. Well, we've got a lot of belief that the flight is imminent from the Italian Air Force. So if it wasn't for that or a delay, Virgin Galactic would now be at about 350, something like that. It's holding up because we've got imminent news, or at least belief in imminent news. So let's go shopping. We now want to pick up Rivian. No, waste of time. Tesla. Bam, 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 bam. It's still too expensive. It will fall back more. If it doesn't fall back more, and Mullen's going to zero. Mullen's got nothing left. Forget Mullen. You can sell for a loss and just get out if you wanted to. It's entirely up to you. Lucid, no, it pays its CEO all its profits. Waste of time. It's going private. Apple's giving up its ghost, but I'm going to hold that. Amazon's going to come back. I've got no doubt about that. It's already oversold. McDonald's is fine. It's a safe play. It'll hold its money. So will Coca-Cola. The ex-dividend date, they're going to stay in today and hold. Safe money will go here. Safe money will also go into J&J. Look, J&J is going up because safe money is now going to take all the money. That's where you want to be. AI is going down. I sold it at the top. That's why I did it. Google, I've got a small position. I'm fine with that. That's a good value stock. Microsoft is fine. Not going to buy any more at these levels. I want to pull back on Walmart. Tesco's got to come down to 6. Next to Energy's got to come down to 70 before I buy any more. Enphase, it's very expensive. Bitcoin's going to 15,000, no doubt about it. Tilray could go bust now. There we go. That's going all the way down. That could go bust. Robinhood is holding up. It's dropping back a bit, but that's a 10x for me, so I'm going nowhere with that one. Now, IonQ is now a buy. If I can buy this, I will buy it. I'm going to watch myself on this one. If we can get this to drop back to the 8 or 7, then I am going to pick some up. So that's my plan. Let's bring on the comments on the screen. Does anybody want to phone in live on the show? I'm going to open up the broadcast lounge for you now. We've got a few minutes to go before the report. Okay, so we're going to open the broadcast lounge. Any of my Discord YouTube members on Discord can now call in. You can ask me a question. You can talk to the audience, say hello, whatever it is you want to do. Virgin Galactic is surprisingly holding up. That's good. That's because we've got fundamental change. Tilray's gone down to 4.9. Rivian's going down all the way. Tesla, great. If I can pick up another couple of percent, I will. I'm very happy to add another 4 shares of Tesla. I want to get back up to 20 again. Let's read your comments on the screen. Here we go. I am very pleased that the best penis in the world answered me. One Invest, how are you? It's lovely to have you, mate. Great to have you here. Welcome to our family, One Invest. Nice. To the moon. Ha, ha, ha. Yeah, right. No, that was never going to happen. The sell-off won't last. Exactly. You've got an opportunity to get a discount here next week. Tesla 200. Yeah, I don't know about that. It's good news. It's good news. I don't understand. Well, of course, the markets are always 6 months ahead. People are always ahead. When they're buying, you're selling. When they're selling, you're buying. The markets are ahead. We knew this was going to happen. We knew. So we bought in. Now all the whales are dumping. I sold my position last night. I sold my AI. I knew this was going to happen. I told you. It was live on the show. I said we would trim off the S&P. I did that. I did it in front of everybody. I mean, everything we do live in front of you. So that it's all there. And what's going on now is it's going to come back. But this is now the sell-off for the next round of buying in. That's all that's happening. Beginning of July, time to buy. Thank you, Nawa Kennedy, for liking the stream on Facebook. I can wait for my paycheck. Well, yeah. Don't be looking at margin right now. It's too expensive. Good news because you can buy good companies at discount prices. Correct. That's right. Let's go back. This is good. Lovely. Brilliant. Down she goes. I want the S&P to go all the way back down to 350. If I could get it for that, I would be having the best day ever. Anyway, we've got about 20 minutes before Jerome Powell speaks. It's very, very hawkish. They don't want the markets to get carried away. They don't want, because listen, guys, if everything goes up like this and everyone buys, it creates inflation because everybody makes free money. Everyone starts overspending. That's not what we want. The Fed want to calm the market. We know what's coming. We now want to know what's coming next. And what's coming next is everyone's selling off and then we buy back in again. Okay? Virgin Galactic, I'm surprised, but not that it's holding up as much as it is. It's because of fundamental change. Rivian, no good at all. It's got too much debt. Tesla, that this is perfectly normal, perfectly acceptable. And just to put into context, because of my balanced portfolio. And what I mean by that is Coca-Cola's taking the money, J&J's taking the money. My portfolio, as dramatic as it looks, has hardly moved. I'm down $193 out of 42,000. So even though this is great, we've got a skip, pause is coming next. This is bullish. This is great. It allows me to buy the dip, and I've lost hardly anything anyway. I've gone down $180 out 106. Here comes the rebound. Here comes the rebound. Do, 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 do. S&P isn't cheap enough yet. I'm not going to buy it back because I earn more in uninvested cash. I'm looking at buying the S&P back. I sold it at 404. I could buy it at 399. I could make $5 a share on it in 5 minutes. However, I'd rather not bother because I'll pay capital gains tax. I'll use one of my day trades. And to be perfectly honest, I'm earning 4.65 on uninvested cash anyway. So there's no real point. I want to be around when it drops 10%, not 0.5%. I want a big reaction. I want a reaction when the market dump everything and then buy it back. That's what I want. I'd rather be patient and hold back. That's not much of a discount, is it? This year is scary. This year's great. Red days are what it's all about. The green days are boring. The green days, we don't do anything. The red days are the days you make money. Yep, going up again. Yes, it will. But buy the dips if you're in a position to. Everything is nosediving. It's not really. FOMC projected they would raise twice more this year despite a pause. That's why they don't like it. But me personally, I don't think that's set in stone. No, of course it's not. It's to scare the market. It's the language that the Fed use. They won't do that. They'll raise one more. Everything tells you it's going down. The Fed don't want to get like what happened in the past. They don't want what's the guy's name? I forgot his name. The last time this happened, Henker, what's his bloody name? I forget his name now. Anyway, they don't want that to repeat itself. So they're overcompensating. Remember what they've always said. They can always bring rates down. They don't have to wait for the FOMC report. They could come on tomorrow and say the rates are coming down tomorrow. They could do it twice in a week. So what they want to do is scare the market. Everyone knows that. And the fearful, the ones who don't understand what they bought in the first place, those people are selling out now. Oh my God, what we're going to do? And that's exactly what they want. They want to drive the price back down again, cool the markets down a little bit, get everybody to relax a little bit. Then the smart money will come in and buy it. That's why I held. You see how it started to go up and it sort of said to you, this is the dip, buy back in again. No, wait, have patience. Know what the S&P is worth to you, not what it's worth to everybody else. You know, at least you know like I do, I'm earning 4.65%. Is the S&P going to go up 4%, 4.5% this year from here? And the answer is no, it's not. So I only want to buy it if I get a 5 to 10% discount, which will compensate me from what I would have earned on interest without any risk. I've already made money on it. I've made 13% on the S&P. Very good. I'm very happy, right? I don't want to be buying back straight away unless it's a good bargain, and it ain't. Anyway, let's carry on a bit. Micah Flemons, how you doing, Micah Flemons? Tesla down 1.36. Let's have a quick look at Tesla. Yeah, not cheap enough though. Remember, Tesla is overbought. Tesla's very expensive. Tesla in the future could be 6x. I made a video explaining why it's going to be 6x, not a Cathy Wood video where they just make up stuff to sell their own, promote their own aims. I told you exactly why it'll be a 6x. Alan Greenspan. No. Volcker. Volcker. That was it. They don't want to make that mistake again. Anyway, Gerald Voslo, welcome. Yup. Rafael Marcus says, yup. Yeah, wait. Have patience. Have patience. Let the market do its thing. Wait. Wait for it to settle. There's never Never a time to rush, even though I'm always in a rush. But then I'm running 14 screens. What is the outcome of the Fed repo rates? I'm not sure what that question means. Soraz Sheikh, come on into YouTube, join us here. Thanks for being over there on Facebook. We've got a guest on Facebook just popped in. I don't really understand his question. Anyway, Tesla more like 10x. No. Not 10x, 20x, no. 6x. And there's a reason why I say that. That's the sort of thing that Cathie Wood says, 20x. No, that's ridiculous. Just do the numbers. You got to have half the world buying a Tesla for those numbers. And half the world, 95% of the world couldn't even afford a Tesla. So let's get absolutely straight. If you think half the world are going to own a Tesla, you're living on cloud cuckoo land. All right? That is ridiculous. That's the sort of thing Cathie Wood says. Did you know if you live in America or anywhere in the UK and you have a job and you have running water and healthcare and education, electricity, you're already 95% richer than everybody else on the planet. So 95% of people are poorer than you. Could you buy a Tesla? Maybe you can. But 95% of the planet's population are poorer than you. That isn't an opinion. That isn't my guessing. That's an actual government fact, global fact. So if you think that everybody in the world, or half the world, is going to own a Tesla, so at 20x, then you're living in cloud cuckoo land. Those numbers don't make any sense. They make sense to Cathie Wood because Cathie Wood likes promoting her businesses. So she'll say anything. She's like BitBoy, she's like George Graham Stepan, she's like Meet Kevin. They're just trying to sell the story. I'm not, I'm trying to build a community. That's what I'm doing. Very different channel. So anyway, Cathie Wood's valuation of 2x a share, 75% based on robo-taxis and cars and not car sales. No, I know that. But 20x is ridiculous. It doesn't make any sense. Half the world got to own a Tesla. Well, half the world don't have cars now. So it can't. I'm bullish, right? I'm bullish, optimistic. I believe anything's possible. I believe I can grow the best YouTube channel in the world, not because of me, because I have the most committed members, the best audience. 95% of my audience are live. Are members. I believe that, but I don't believe half the world is going. So I'm bullish, but I don't believe half the world is going to buy a Tesla. I don't just believe it. I know it can't happen. It physically can't happen. But it sounds great when you're telling people on YouTube and stuff like that. Well, I ain't doing that. That's stupid. Just have you read Inbound? Have you ever read the balance sheet? Have you ever actually read the balance sheet and how much money Tesla make? And the margins are better than anyone's. But even those numbers that you're talking about make no sense at all. Anyway, this is perfect. I'm glad I sold my S&P. We knew this was going to happen. So now we're looking for massive drops, 5-10% before I buy back. Tesla Model X will change everything. The 25,000 model, no it won't. For those who can afford a new car, it does. Not for those who live in India, not for those who live in Africa, it doesn't. 95% of the planet cannot afford a $25,000 car. I know. I've toured the whole world as the world piano man. I know. Trust me, most people walk. The number one transportation mode in the world is walking. That's a fact. I'm exaggerating a bit, but I am. But I am. No company can have this much discussion. This much what? This? Can you rephrase that? You just misspelt it. Mullen, it's good for a buy now. No, I don't think so. I've got evidence to show that Mullen is a complete and utter scam. The CEO has literally scammed everybody. It's terrible. Mullen is a joke. I have lost about $550 now. And no, Mullen is not a buy. Mullen is absolutely not a buy. Remember, it's had a reverse split. It's now worth less than 1 cent a share. It's worth nothing. You are going out and buying a pile of turd on the floor and picking it up and going, will somebody give me some money for this? It's absolutely produces nothing, makes nothing. Debt's climbing to new heights. There's no rate cut. Inflation, interest ain't coming down. No. I'm already in, but am I buying any more? My God, no. I keep getting people telling me that it's being shorted. No one is shorting Mullen at 26 cents. If you're going to come in and short a stock that's actually worth less than 1 cent, you must be off your flipping head. Because that's ridiculous, right? Who does that? Biggest problem with the EVs is in the US is our power grid can't support even a quarter of the US swapping to EVs. Correct. That's absolutely correct. And it's going to get worse now because Elon Musk has got the deal with Ford and GM, and we've already got fights breaking out at the charging stations. So, yeah, ridiculous. What about the AI technology? The AI technology of Tesla is fantastic. The AI, what's going to make the most money for Tesla? People say the robo-taxis. For me, it's the power. For me, it's the power and insurance as well. People always overlook the insurance. The AI, the Tesla insurance when cars don't crash anymore. That's the cash cow right there. You've got cars on the road talking to each other, never crashing. And you have Tesla insurance. And they go, right, the competition insurance is $1,000 a year. Tesla can go, we're going to undercut you and we're going to charge you $100 a year. And everyone's going to go, brilliant. Let's have Tesla insurance. The other industries, the other insurance, burp, zero. No one's going to buy their insurance. And they'll make $100 off everybody and no cars will crash. They'll just keep talking to each other and there'll be no crashes. That's where Tesla will make their money. Tesla insurance. You watch. Watch the S&P pump when Powell starts talking. We've got 9 minutes to go. 9 minutes to go before the speech. So you are in the right place. People often wonder what's going on. Where's the speech? Well, it's coming up in a minute. Why is it down? I've got questions coming in from Rumble, Twitter, Facebook, because the Fed want to calm the markets down. That's why we sold off last night. At least I did. And simply the value of their mass-produced batteries. Another thing they're going to make money on is lithium refining. That's a new industry now for Tesla. We would need a complete overhaul of our power grid to support that many EVs. Yes, we would. You're dead right. I think Elon will try to compete with NVIDIA in AI. No, he won't. I don't think he'll do that. I don't think he'll do that at all. They are completely different areas. They need each other, I would say. NVIDIA produces things that Tesla could use. So I don't think there'll be any competition there. Can Tesla sell 20 million cars? Yes. It's possible, I'd say, in 10 years. Correct. Yes, I agree with that. Which they've stated as their goal. Yes, no doubt about it. This could bring in around 75 billion plus just from car profits, not including FSD. Yes, I agree with that. Tesla, yeah, but you've got to remember, though, the numbers you're quoting is basically the value of where we are today on the stock price. That's the point. The share price of Tesla right now is 73 times earnings. This is where we are already. What you're saying, if they sell all that many cars, we're already, that's the value of the stock right now. If you're an investor, you are looking to buy value. You're not looking to pay any price for any stock. Unless you're a gambler, of course, then help yourself. But I'm looking to find value, not any price. So Tesla is going to come back down and then we're going to buy some more because it's overpriced. I've said this over and over again. I like where Tesla's going, but I have said over and over again, before the lithium announcement, I priced it at $60 a share. I then increased that with the potential of the lithium refining, and I was looking at the 120, 150, and that's when I got in. It was actually worth $60 before that. So there's no point saying, I am prepared to pay this for a stock because it will be there in 20 years. I can make money on something else for the next 20 years. That's ridiculous. Just take your money and put it in the S&P. You got 10% every year for the next 20 years. That doesn't make any sense. Why are you overpaying for a stock 20 years into the future? That's what you're saying. Doesn't make any sense. Anyway. But that's what people do. It's quite funny, isn't it, when you think about it? When you stop and think about it, it all makes sense, doesn't it? You go, oh yeah, I suppose it does make sense. If you think about it, why do we overpay for anything? I don't understand it. I think it's ridiculous. I think it's more than ridiculous. I think it's actually stupid. But people are greedy, lazy, want to get rich in 5 minutes, don't want to wait. No one listens anymore. We all want everything tomorrow. What can I buy today and make me rich in 5 minutes? I want that. And when it doesn't go the way I want it, I'm going to short it and I'm going to try and destroy it. I mean, we're not working together as a team. But that's how the system works. So you have to learn that, and then you win every time. And that's why I'm consistently up. So anyway, all we're doing here today, I want to be absolutely clear. We've got 4 minutes to go. What we're doing here is actually trading people's emotions. That's all we're trading. We're not buying stocks. I buy the companies, right? What we're doing here is trading people's emotions. Who's got the most fear? Who's selling out the fastest? That's all we're doing. Anyway, it's funny, isn't it? Tesla factories now all worth more than 100 billion, says Inbound. Skip, no rate hike. Great news, but JP Grim Reaper will bring up 20%, 2% up, bring up. Yes, JP will warn rate hikes may increase. Yeah, that's right. That's right. We've covered that. Stephen, where have you been? Everything you just said there, we've already said, like 20 minutes ago. And in fact, I announced the rate cut before Bloomberg. I beat them today by about 5 minutes. No, it was about 30 seconds. Right, 3 minutes to go. So, okay. Let's do it, shall we? Anybody want to watch a bit of telly? We're going to watch a bit of telly for the next 5 minutes. Well, it's about 45 minutes, actually, to tell the truth. It's about 45 minutes. So is everybody ready for that? Okay. Amazon's having a good dip. Yeah. Amazon's already, it's very expensive, but I feel it's absolutely a buy because I know where Amazon's going. Amazon is all about the AI. Just bought more shares before the Fed meeting. Shan, nice one. Good luck to you. It's not gone cheap enough. That S&P isn't cheap enough for me. I sold it at 404. I'm not buying it here. Because they are lazy. Because they're lazy. Everyone's bloody lazy. You're sat on your backside now. How many of you are sat on the toilet watching me on the phone? How many? Put in the chat if you're watching me on the toilet right now. I bet you, how many are watching? There are 86 people watching. I guarantee there's 5 people sat on the toilet right now watching me. Lazy. There's 5 of you right now. I guarantee it. I guarantee there's 5 of you. In fact, I'll make it so you don't have to admit it, right? Start a poll. Are you on the toilet? Right, lazy people, you watch. Are you on the toilet right now? Let me see how many people are sat on the toilet watching this, trying to get rich. There you go. I bet you there are at least, how many we've got watching? 84 watching. I bet you we've got 2 people. I bet I get 2% saying, yes, I'm sat on the toilet. Tell the truth. Don't lie. Don't lie. Don't lie. Tell the truth. There you go. Told you, didn't I? What you don't realise is there's a camera in in your phone. I'm looking back at you sat on the toilet. That's going to freak you out, isn't it? That's going to upset you. Is there? No, tell me. He can't see me, can he? Can he see me? I'm watching him on YouTube. Can he see me? No. Just in case anyone's confused, I cannot see you sat on the toilet. I just want that out there, right? So everybody knows. Oh, God, it's a bear trap. Of course it's a bear trap. Everybody knows it's Shanaway. Do you think Adobe will do well in earnings? Baron Hanley, I don't follow it. I can't tell you. I know I'm a customer, but that's all I can tell you. Right, here we go. Here we go. Let's get ready to rock and roll.
To your clients at KPMG, at the Bank of America, and of course at PGIM as well, Diane Swank, Michael Gapin, and Michael Collins. And all of a sudden the snooze fest became, and you heard it in McKee's voice, you know, you could just hear the shock of the language and what we heard from Mr. Madison, Dr. Hollenhorst as well.
This was surprisingly
They're speaking now,
hawkish, if you want
Sensei.
to say so, because people were perhaps anticipating.
It's about to happen now. I don't bring the phone into the bathroom at home. I don't bring phone into the bathroom at home. I am watching on my phone at work, especially UK people. There's the beautiful man. How's it going, Rocket Man? Tesla Jam. Did everyone see my world premiere today? I'm very upset. Here's my world premiere. Everybody watch it. I'm the world piano man. I'm trying to keep the music alive. AI is now killing the music. It was declared 2 days ago that it was a day that music died. Okay, I can tell you that now. The day the music died was 2 days ago. And I am doing videos, world premieres, every day, 2 hours after I've gone live in the morning. There is the link. Go and look at it. It's pinned to the top at the end of the show. Please go and do it. If you want to keep music live and AI free, I use the hashtag LucasAids and AI free. Here he is. Showtime.
Big folder. No, not. You can expect to see him having written down a lot of the answers. Let's head it over to Fed Chair Jay Powell.
Good afternoon. My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. We understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy doesn't work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Since early last year, the FOMC has significantly tightened the stance of monetary policy. We have raised our policy interest rate by 5 percentage points, and we've continued to reduce our securities holdings at a brisk pace. We've covered a lot of ground, and the full effects of our tightening have yet to be felt. In light of how far we've come in tightening policy, the uncertain lags with which monetary policy affects the economy, and potential headwinds from credit tightening, today we decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Looking ahead, nearly all committee participants view it as likely that some further rate increases will be appropriate this year to bring inflation down to 2% over time. And I will have more to say about monetary policy after briefly reviewing economic developments. The U.S. economy slowed significantly last year, and recent indicators suggest that economic activity has continued to expand at a modest pace. Although growth in consumer spending has picked up this year, activity in the housing sector remains weak, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Committee participants generally expect subdued growth to continue. In our summary of economic projections, the median projection has real GDP growth at 1.0% this year and 1.1% next year, well below the median estimate of the longer-run normal growth rate. The labor market remains very tight. Over the past 3 months, payroll job gains averaged a robust 283,000 jobs per month. The unemployment rate moved up but remained low in May at 3.7%. There are some signs that supply and demand in the labor market are coming into better balance. The labor force participation rate has moved up in recent months, particularly for individuals aged 25 to 54 years. Nominal wage growth has shown signs of easing, and job vacancies have declined so far this year. While the jobs to workers gap has declined, labor demand still substantially exceeds the supply of available workers. FOMC participants expect supply and demand conditions in the labor market to come into better balance over time, easing upward pressures on inflation. The median unemployment rate projection in the SEP rises to 4.1% at the end of this year and 4.5% at the end of next year. Inflation remains well above our longer-run 2% goal. Over the 12 months ending in April, total PCE prices rose 4.4%, excluding the volatile food and energy categories. Core PCE prices rose 4.7%. In May, the 12-month change in the Consumer Price Index came in at 4%, and the change in the core CPI was 5.3%. Inflation has moderated somewhat since the middle of last year. Nonetheless, inflation pressures continue to run high, and the process of getting inflation back down to 2% has a long way to go. The median projection in the SEP for total PCE inflation is 3.2% this year, 2.5% next year, and 2.1% in 2025. Core PCE inflation, which excludes volatile and food and energy prices, is projected to run higher than total inflation, and the median projection has been revised in the SEP up to 3.9% this year. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. As I noted earlier, since early last year, we have raised our policy rate by 5 percentage points. We have been seeing the effects of our policy tightening on demand in the most interest rate sensitive sectors of the economy, especially housing and investment. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. The economy is facing headwinds from tighter credit conditions for households and businesses, which are likely to weigh on economic activity, hiring, and inflation. The extent of these effects remains uncertain. In light of how far we've come in tightening policy, the uncertain lags with which monetary policy affects the economy, and potential headwinds from credit tightening, the committee decided at today's meeting to maintain the target range for the federal funds rate at 5 to 5.25%, and to continue the process of significantly reducing our securities holdings. As I noted earlier, nearly all committee participants expect that it will be appropriate to raise interest rates somewhat further by the end of the year. But at this meeting, considering how far and how fast we've moved, we judged it prudent to hold the target range steady to allow the committee to assess additional information and its implications for monetary policy. In determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. In our SEP, participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 5.6% at the end of this year, 4.6% at the end of 2024, and 3.4% at the end of 2025. For the end of this year, the median projection is a 0.5 percentage point higher than in our March projections. I hasten to add, as always, that these projections are not a committee decision or plan. If the economy does not evolve as projected, the path for policy will adjust as appropriate to foster our maximum employment and price stability goals. We will continue to make our decisions meeting by meeting based on the totality of incoming data and their implications for the outlook for economic activity and inflation, as well as the balance of risks. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do at the Fed is in service to our public mission. We will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Thank you. Colby Smith with the Financial Times. I'm curious what gives you and the committee the confidence that waiting will not be counterproductive at a time when the monthly pace of core inflation is still so elevated. Interest rate sensitive sectors like housing, while they felt the drag of the past Fed actions, have started to recover in some regions, and financial conditions, most recently were easing.
So I guess I would go back to the beginning of this tightening cycle to address that. So as we started our rate hikes early last year, we said there were 3 issues that would need to be addressed kind of in sequence. And that of the speed of tightening, the level to which rates would need to go, and then the period of time over which we'd need to keep policy restrictive. So at the outset, going back 15 months, the key issue was how fast to move rates up, and we moved very quickly by historical standards. Then last December, after 4 consecutive 75 basis point hikes, we moderated to a pace of a 50 basis point hike, and then this year to 3 25 basis point hikes at sequential meetings. So it seemed to us to make obvious sense to moderate our rate hikes as we got closer to our destination. So the decision to consider not hiking at every meeting and ultimately to hold rates steady at this meeting, I would just say it's a continuation of that process. The main issue that we're focused on now is determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time. So the pace of the increases and the ultimate level of increases are separate variables. Given how far we have come, it may make sense for rates to move higher, but at a more moderate pace. I want to stress one more thing, and that is that the committee decision made today was only about this meeting. We didn't make any decision about going forward, including what would happen at the next meeting, including we did not decide or really discuss anything about going to an every other meeting kind of an approach or really any other approach. We really were focused on what to do at this meeting.
So there was no kind of initial debate about the possibility of July, any sense of the initial support at this stage for that move?
So again, we didn't make a decision about July. I mean, of course, it came up in the meeting from time to time, but really the focus was on what to do today. I would say about July 2 things. 1, decision hasn't been made. 2, I do expect that it will be a live meeting.
Thanks, Howard Schneider with Reuters. I was just wondering if you could help us understand the narrative here, because it feels like there's been a level shift in the dots. Stronger GDP, less of a hit to unemployment, slower progress on inflation. And I'm wondering, in this, sort of, where's the disinflation coming from?
Sure.
The labor market's going to be stronger, it looks like. It's not coming from there. Demand's not coming down all that fast, according to GDP. You've doubled your estimate of GDP. So what's the narrative here? It seems like it's getting more immaculate rather than more messy.
So you're right that the data came in, I would say, consistent with, but on the high side of expectations. So, and if you go back to the former SEP, the last SEP in March, you will see that growth moved up. These are not huge moves, but growth estimates moved up a bit. Unemployment estimates moved down a bit. Inflation estimates moved up a bit. And, all 3 of those kind of point in the same direction, which is that perhaps more restraint will be necessary than we had thought at the last meeting. So although the level, frankly, is pretty, the level of 5.6 is pretty consistent if you think about it, where the federal funds rate was trading before the bank incidents of early March. So we've kind of gone back to that. So your question is, where's the disinflation going to come from? And I don't think the story has really changed. The committee has consistently said and believed that the process of getting inflation down is going to be a gradual one. It's going to take some time. And I think you go back to the three-part framework for core PCE inflation, which is, we think, as good an indicator as you can have for where inflation is going forward. You start with goods. With goods, we need to see continued healing in supply side conditions. They've definitely improved a substantial amount, but if you talk to people in business, they will say it's not back to where it was. So that's one thing, and that should enable goods prices to continue, goods inflation to continue to come down over time. In terms of housing services inflation, that's another big piece, and you are seeing there that new rents, new leases are coming in at low levels, and it's really a matter of time as that goes through the pipeline. In fact, I think any forecast that people are making right now about inflation coming down this year will contain a big dose of this year and next year will contain a good amount of disinflation from that source, and that's again probably going to come slower than we would expect. That leaves the big sector, which is a little more than half, pardon me, of core PCE inflation. That's non-housing services, and we see only the earliest signs of disinflation there. It's a sector, it's a very broad and diverse sector. I would say in a number of the parts of that sector, the largest cost would be wage costs. It's the service sector, so it's heavily labor intensive, and I think many analysts would say that the key to getting inflation down there is to have a continuing loosening in labor market conditions, which we have seen. We have actually seen, I could go through a number of indicators suggesting there's been some loosening in labor market conditions. We need to see that continue. I would almost say that the conditions that we need to see in place to get inflation down are coming into place, and that would be growth meaningfully below trend. It would be a labor market that's loosening. It would be goods pipelines getting healthier and healthier and that kind of thing. The things are in place that we need to see, but the process of that actually working on inflation is going to take some time.
Nick Timmeros of the Wall Street Journal. Chair Powell, what's the value in pausing and signaling future hikes versus just hiking now? I mean, not to be flippant, but I don't lose weight just by buying a gym membership. I have to actually go to the gym. 16 of your colleagues put down a higher year-end 23 rate today. A majority of you think you're going to have to go up by 50 basis points this year. So why not just rip off the Band-Aid and raise rates today? So
first I would say that the question of speed is a separate question from that of level. Okay, so and I think if you look at the SEP, that is our estimate, our individual. It's really accumulation of our individual estimates of how far to go. I mentioned how we got to those numbers. In terms of speed, it's what I said at the beginning, which is speed was very important last year. As we get closer and closer to the destination, and according to the SEP, we're not so far away from the destination in most people's accounting. It's reasonable, it's common sense to go a little slower, just as it was reasonable to go from 75 basis points to 50 to 25 at every meeting. And so the committee thought overall that it was appropriate to moderate the pace, if only slightly. And there are benefits to that. So that gives us more information to make decisions. We may try to make better decisions. I think it allows the economy a little more time to adapt as we make our decisions going forward. And we'll get to see, we don't know the full extent of the consequences of the banking turmoil that we've seen. It would be early to see those, but we don't know what the extent is. We'll have some more time to see that unfold. I mean, it's just the idea that we're trying to get this right. And this is, if you think of the two things as separate variables, then I think that the skip, I shouldn't call it a skip, the decision makes sense.
I know you said July is live with only one June employment, with only the June employment and the CPI report for June. due to be released before the July meeting. You get the ECI after, you get the senior loan officer survey after, you get some bank earnings at the end of next month. What incremental information will the committee be using to inform their judgment on whether this is in fact a skip or a longer pause?
Well, I think you're adding that to the data that we've seen since the last meeting too. Since we chose to maintain rates at this meeting, it'll really be a 3-month period of data that we can look at. And I think that's a full quarter, and I think you can draw more conclusions from that than you come from any 6-week period. We'll look at those things. We'll also look at the evolving risk picture. We'll look at what's happening in the financial sector. We'll look at all the data, the evolving outlook, and we'll make a decision.
Gina.
Thanks for taking our questions. Gina Smilek, New York Times. You obviously, in your forecast, marked up the sort of path for growth, marked down the path for unemployment, and marked up the path for inflation pretty notably. I wonder, since March, what has changed to make you think that the economy is a lot more resilient and inflation is going to be a lot more stubborn? And given that, why do you feel confident that this is as high as you're going to have to revise the federal funds rate, or do you think it's possible we could have even a higher than 5.6% terminal by the end of this cycle?
I mean, on the first part, I just think we're following the data and also the outlook. The economy the labor market, I think, has surprised many, if not all, analysts over the last couple of years with its extraordinary resilience, really. It's just remarkable, and that's really, if you think about it, that's what's driving. It's job creation, it's wages moving up, it's supporting spending, which in turn is supporting hiring, and it's really the engine, it seems, that is driving the economy. So it's really the data. In terms of, we always write down at these meetings what we think the appropriate terminal rate will be at the end of this year. That's how we do it. It's based on our own individual assessments of what the most likely path of the economy is. It can actually, in reality, wind up being lower or higher. And there's really no way to know. But it's what people think as of today. And as the data come in, it can move around during the intermeeting period. It could wind up back in the same place. But it really will be data driven. I can't tell you that I ever have a lot of confidence that we can see where the federal funds rate will be that far in advance.
Mr. Chairman, thanks for taking my question. You had said back at the end of May that you thought risks were getting closer to being into balance. Is that still the case, or has your mind changed about the balance of risks out there? And also, could you give us an idea of what would be a sufficiently restrictive funds rate? Obviously the current rate, according to the committee, is not sufficiently restrictive. Is it 5.6? Is it 6? Where is it sufficiently restrictive? Thank you.
I would say again that I think that over time, the balance of risks, as we've moved from from interest rates at effectively 0 now to 5 percentage points with an SEP calling for additional hikes, I think we've moved much closer to our destination, which is that sufficiently restrictive rate. And I think that means, almost by definition, that the risks of sort of overdoing it and underdoing it are getting closer to being in balance. I still think, and my colleagues agree, that the risks to inflation are to the upside still. So we don't think we're there with inflation yet, because we're just looking at the data. And if you look at the full range of inflation data, particularly the core data, you just aren't seeing a lot of progress over the last year. Headline, of course, inflation has come down materially, but as you know, we look at core as a better indicator of where inflation overall is going. So I think what we'd like to see is credible evidence that inflation is topping out and then beginning to come down. That's what we want to see. Of course, that's what we want to see. And I think it's also, we understand that there are lags, but remember that it's more than a year since financial conditions began tightening. I think the reason we're comfortable pausing is that we are still, much of the tightening took place over last summer and later into the year, and I think it's reasonable to think that some of that may come into effect. So we're, I think stretching out into a more moderate pace is appropriate to allow you to make that judgment of sufficiency, with more data over time.
Rachel.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions. I wanted to ask further on the lag effects. When you're considering when you would hike again throughout the course of the year, are there things that you would expect to kick in as those lag effects come into effect that would inform your decisions? Have you learned things over the past year that give you some sense of timeline for when to expect those lags to come into effect?
Yeah. So it's a challenging thing in economics. It's sort of standard thinking that monetary policy affects economic activity with long and variable lags. Of course, these days, financial conditions begin to tighten well in advance of actual rate hikes. So if you look back when we were lifting off, we started talking about lifting off. By the time we had lifted off, the 2-year, which is a pretty good estimate of where policy is going, had gone from 20 basis points to 200 basis points. So in that sense, tightening happens much sooner than it used to in a world where news was in newspapers and not on the wire. So that's different, but it's still the case that what you see is interest-sensitive spending is affected very, very quickly. So housing and durable goods and things like that. But broader demand and spending and asset values and things like that, they just take longer. And you can pretty much find research to support whatever answer you would like on that. So there's not any certainty or agreement in the profession on how long it takes. So, and that makes it challenging, of course. So we're looking at the calendar, we're looking at what's happening in the economy, we're having to make these judgments. And again, it's one of the main reasons why it makes sense to go at a slightly more moderate pace now as we seek that ultimate. I can't point to that ultimate endpoint. I can't point to a specific data point. I think we'll see it when we see inflation, really flattening out reliably and then starting to soften. I think we'll know that it's working. And ideally, by taking a little more time, we won't go well past the level where we need to go.
I was curious if you could give us an update on what you're seeing on credit tightening since the bank incidents from March and how you're teasing that out apart from these lag effects.
So it's too early still to try to assess the full extent of what that might mean. And that's something we're going to be watching, of course. And if we were to see what we would view as significant tightening beyond what would normally be expected because of this channel, then we would factor that into account in making rate decisions. So that's how we think about it.
Let's go to Chris.
Thanks. Chris Rugaber at Associated Press. You mentioned that many of the trends are in place that you want to see. Core services ex-housing has come in pretty low in the past couple of months. And as you noted, a significant portion of core inflation is now housing prices. And then we've had some quirks in used car prices. So given that these trends are in place, I guess I'm sort of asking the flip side of Nick's question, why signal additional rate hikes? Aren't things headed in the direction you need? Why not simply give it even more time? Or it's surprising to see so much hawkishness in the dots given what we're seeing recently.
Yeah, so we've we're 2.5 years into this, or 2.25 years into this, and forecasters, including Fed forecasters, have consistently thought that inflation was about to turn down, and typically forecasted that it would, and been wrong. So I think if you look at core PCE inflation overall, look at it over the last 6 months, you're just not seeing a lot of progress. It's running at a level over 4.5%, far above our target, and not really moving down. We want to see it moving down decisively. That's all. Of course, we are going to get inflation down to 2% over time. We want to do that with the minimum damage we can to the economy, of course, but we have to get inflation down to 2%, and we will. And we just don't see that yet. So hence you see today's policy decision, both to write down further rate hikes by the end of this year, but also to moderate somewhat the pace with which we're moving.
Quick follow-up. I mean, the last press conference you mentioned you didn't see wages driving inflation, and there was some research from the San Francisco Fed suggesting wages aren't necessarily a key driver, but you've talked about the labor market today and the need for softening. Can you give us a little more specifically of how you see the tight labor market driving inflation at this point? Thank you.
Right. So I'm not going to comment on any particular paper, but I would say that I think the overall picture is that at the beginning, in early 2021, inflation was really coming from very strong demand largely for goods. People were still at home. They had money in the bank, and they wanted to spend, and they spent a lot on goods. And of course, at the same time, and because of that high demand to some extent, supply chains got all snarled up. So prices went way up, inflation went way up. That was the origin, and it wasn't really particularly about the labor market or wages. But as you moved through 21 into 22 and now in 23, I think many analysts believe that it will be important, an important part of getting inflation down, especially in the non-housing services sector, to getting wage inflation back to a level that is sustainable, that is consistent with 2% inflation. We actually have seen wages broadly move down, but just at a quite gradual pace. So, and that's a little bit of the finding of the Bernanke paper with Blanchard of a few weeks ago, which is very consistent with what I would think.
Let's go to Michael McKee.
Michael McKee from Bloomberg Radio and Television. You said in the past that you don't like to surprise markets. It's kind of been the Fed's view. Markets should have an idea of what you're going to do before you go in. You also said a number of times that it would take a while to bring inflation down. You reiterated that again today, and that we would get to a point where inflation could be sticky. So I'm wondering, as we go into the next meetings, how Wall Street or others should look at your reaction function. What will you be reacting to, time or data? In other words, if nothing much changes, if we're looking at the same sort of labor market, the same sort of inflation levels in July or in September or November, will you move because you've said you feel you need to? Is it time that's going to require additional movement, or would it be a reversal in inflation?
So I don't want to deal with hypotheticals about different ways data might move on. So we of course we don't go out of our way to surprise markets or the public. At the same time, our main focus has to be on getting the policy right, and that's what we're doing here, and that's what we'll do for the upcoming meetings. I will say the July meeting will be live, and we'll just have to see. I think you'll see the data, you'll hear Fed people talking about it, and markets will have to make a judgment.
Well, do you think inflation is likely to continue coming down based on the lags and based on your threat of additional movement, or are we going to be in a period where we're not going to know what's happening?
I think if you look at if you just look at, I'll just point you to the forecast. So inflation is running, core PCE inflation is running at about 4.5%, a little higher than 4.5%, and the median FOMC participant thinks it'll go down to 3.9 on a 12-month basis. This is by the end of this year. So that's expecting pretty substantial progress. That's a pretty significant decline for half a year. So that's the forecast. We do try to be transparent in our reaction function. We're committed to getting inflation down. And that's the number one thing. So that's how I think about it.
Let's go to Victoria.
Victoria Guido with Politico. Could you talk about the balance sheet and how you're thinking about it? What are you looking for to judge whether we're approaching reserve scarcity, and is Treasury issuance going to affect that? Also, are you considering lowering the RRP rate in order to take some pressure off banks?
So let me say, first of all, on the Treasury part of it, if I can talk about that, and then go back to the balance sheet. So on that, of course, we've been very focused on that for a couple of months, as everyone has. Treasury has laid out its borrowing plans publicly. I think I saw the Secretary's comments yesterday to the effect that Treasury has consulted widely with market participants about how to avoid market disruption, and that they're going to watch carefully for that. So that's from the Treasury, which actually sets the borrowings. At the Fed, we'll be monitoring market conditions carefully as the Treasury refills the TGA. The adjustment process is very likely to involve both a reduction in the RRP facility and also in reserves. It's really hard to say at the beginning of this which will be greater. we are starting at a very high level of reserves and still elevated RRP to take up, for that matter. So we don't think reserves are likely to become scarce in the near term or even over the course of the year. So that's the Treasury part of the answer. We will, of course, continue to monitor conditions in money markets, and we're prepared to make adjustments to make sure that monetary policy transmission works. Was there another part of your question?
Yeah. What are you considering lowering the RRP rate to help take some pressure off banks?
So we have a number of. I would say the RRP doesn't look like it's pulling money out of the banking system. It's actually been shrinking here lately. So I don't think that's not something we've thought about a lot over time. It doesn't really look like that's something we would do. I think it's a tool that we have. If we want to use it, we can. There are other tools we can use to address money market issues, but I wouldn't say that that's something that's likely that we would do in the near term.
Janelle Marte with Bloomberg. Have you seen sufficient cooling in the housing market to bring inflation down? For example, how does the recent rebound affect your forecasts, and how does it factor into monetary policy?
So certainly housing very interest sensitive, and it's the first place really, or one of the first places that's either helped by low rates or that is held back by higher rates. And we certainly saw that over the course of the last year. We now see housing putting in a bottom and maybe even moving up a little bit. We're watching that situation carefully. I do think we will see rents and house prices filtering into housing services inflation, and I don't see them coming up quickly. I do see them kind of wandering around at a relatively low level now, and that's appropriate.
Do you think you'll have to target that with further rate increases?
Well, I think we look at everything. We don't just look at housing. So I think, the way it works is the individual participants sit in their offices all over the country and they write down their forecast, and including their most likely forecast, including their rate forecast, and then they send it in on Friday afternoon, and we accumulate it, and then we publish it for you. So that's how they do that. Well, I don't know that housing is itself going to be driving the rates picture, but it's part of it.
Let's go to Edward.
Thank you for taking the question, Mr. Chairman. Edward Lawrence with Fox Business. So I want to go back to comments you made about in the past about unsustainable fiscal path. The CBO projects the federal deficit to be $2.8 trillion in 10 years. The CBO also says that federal debt will be $52 trillion by 2033. At what point do you talk more firmly with lawmakers about fiscal responsibility? Because I'm assuming monetary policy cannot handle alone the inflation or keep that inflation in check with the higher level of spending.
I don't do that. That's really not my job. We hope and expect that other policymakers will respect our independence on monetary policy, and we don't see ourselves as the judges of appropriate fiscal policy. I will say, and many of my predecessors have said, that we are on an unsustainable fiscal path, and that needs to be addressed over time. But I think trying to get into that with lawmakers would be kind of inappropriate, given our independence and our need to stick to our knitting.
Is there any conversation then about the Federal Reserve financing some of that debt that we're seeing coming down the pike?
No, under no circumstances.
Courtney.
Thanks for taking our questions, Chair Powell. So looking at the SEP, it looks like GDP for this year was raised significantly, your forecast for GDP this year. The unemployment rate, meanwhile, was pulled downward. And so should we take that as a sign that the committee is more confident about the prospects of a soft landing, at least as it relates to what you were expecting in March?
I would just say it this way. I continue to think, and this really hasn't changed, that there is a path to getting inflation back down to 2% without having to see the kind of sharp downturn and large losses of employment that we've seen in so many past instances. It's possible. in a way, a strong labor market that gradually cools could aid that along. It could aid that along. But I guess I want to come back to the main thing, which is, though, simply this. We see, the committee, as you can see from the SEP, the committee is completely unified in the need to get inflation down to 2%, and we'll do whatever it takes to get it down to 2% over time. That is our plan. And you know, we understand that allowing inflation to get entrenched in the U.S. economy is the thing that we cannot allow to happen for the benefit of today's workers and families and businesses, but also for the future. Getting price stability back and restored will benefit generations of people as long as it's sustained, and it really is the bedrock of the economy, and you should understand that that is our top priority.
Just a quick follow-up on that. I'm just a little confused because you said the committee will do whatever it takes to get inflation down over time. But when I look at the SEP, inflation is still projected to be elevated next year, but the Fed funds rate is lower than where it is now. Can you help me understand that?
Sure. So, you know, if you look 2 and 3 years out with the forecast, first of all, I wouldn't put too much weight on forecasts even 1 year out because they're so highly uncertain. But what they're showing is that as inflation comes down in the forecast, if you don't lower interest rates, then real rates are actually going up, right? So just to maintain a real rate, the nominal rate at that point 2 years out, let's say, should come down just to maintain real rates. And actually, you know, since we're probably going to we're having real rates that are going to have to be meaningfully positive. And significantly so for us to get inflation down, that probably means that certainly means that it will be appropriate to cut rates at such time as inflation is coming down really significantly. And again, we're talking about a couple years out. I think, as anyone can see, not a single person on the committee wrote down a rate cut this year, nor do I think it is at all likely to be appropriate if you think about it. Inflation has not really moved down. It is not so far reacted much to our existing rate hikes, and so we're going to have to keep at it.
Julie. The mic is coming.
Oh, sorry. Thank you. Hi, Chair Powell. Julie Chabanas, AFP News Agency. The May job report showed a rebound in May in black workers' unemployment. Is it consistent with the Fed's maximum employment mandate? Are you worried about that, about this rebound?
So we are, of course, worried about. There are long-standing differences in racial and ethnic groups across our labor market. That's a factor that we can't really address with our tools, but we do consider that when we're thinking about what constitutes maximum employment. It is for us a broad and inclusive goal. And so we do watch that. But remember, all unemployment, including black unemployment, has been bouncing around right near historic lows, historic modern lows here. So we're still talking about, I mean, what is as strong a labor market as we've seen in, you know, a half century here in the United States. So overall unemployment of 3.7% is 0.3 higher than it was measured to be at the last a month ago, but still it's extraordinarily low. And so it's a very, very tight labor market.
Megan.
Thank you. I want to follow up first a little bit just on the rent question on housing. We heard Governor Waller talk about how, I'll back up, we haven't quite seen the slowdown in rents show up in CPI yet, and we did hear Governor Waller talk about how an uptick in housing might mean that there's not going to be as much relief coming or a shorter bit of relief than we thought. Can you talk about how you're thinking about that and how that played into today's outcome?
I wouldn't say, so that's, you know, as a factual matter, that's correct. We do need to see, you know, rents bottom out here or at least stay quite low in terms of their increases, because we want the you know, we want inflation to come down, and rental is a very large part of the CPI, about a third, and it's about half of that for the PCE. So it's important, and so it's something that we're watching very carefully. It's part of the overall picture. I wouldn't say it's the decisive part, but take a step back. What you see is look at core inflation over the past 6 months, year, you're just not seeing a lot of progress, not the kind of progress we want to see. And it's hard to avoid that. And, the committee, people in the committee, the median went up significantly, so that the median participant now thinks that core PCE inflation on a 12-month basis will be 3.9% this year. So once again, every year for the past 3 years, it's gone up over the course of the year, and that's doing that again. So we see that, and we see that inflation forecasts are coming in low again, and we see that tells us that we need to do more. And so that's why you see the SEP with where it is.
Could you also talk briefly about your outlook for wages, and given the recent slowdown in core services excluding housing, how far you think wages might need to fall in order to get inflation back in line?
So wages will continue to increase. So what we're talking about is having wage increases still at a very strong level, but at a level that's consistent with 2% inflation over time. And so I think we've seen some progress. All of the major measures of wages have moved down from extremely elevated, not extremely, but highly elevated levels a year or so ago, and they're moving back down, but quite gradually. And we would want to see that process continue gradually. Of course, it's great to see wage increases, particularly for people at the lower end of the income spectrum. But we want that as part of the process of getting inflation back down to 2%, which benefits everyone. I mean, inflation hurts those same people more than anyone else. People on a fixed income are hurt the worst and the fastest by high inflation.
Greg.
Thank you so much, Chair Powell. Greg Robb from MarketWatch. I just wondered if the committee has talked at all about the labor market, and there's strikes now in Hollywood, and now the United Auto Workers are talking about a possible strike. I mean, aren't workers, some workers have power now and are going to be seeking higher wages. Does that come up in your discussions? Thanks.
So the topic of wages in the labor market and dynamics in the labor market is about as central a topic to our discussions as anything. I mean, it's very labor economics, and the labor market are utterly central. It's half of our mandate, so we spend a lot of time talking about that. I think there are structural issues that are really not for the Fed. And so we don't spend a lot of time, although we take notice of what's going on. But we're not involved in discussions or debates over strikes and things like that. But we look and we see what's going on, and we're making judgments about what it will take to get inflation down to 2% in the aggregate. And as I said, don't think that was about. Most folks would say now it wasn't really about wages at the beginning. And it's becoming more about that as we get into really service sector inflation, which is the part of the economy where we have seen the least progress.
Let's go to Mark for the last question.
Thank you, Mr. Chairman. Mark Hamrick with Bankrate. Wondering what your thoughts are now about systemic risk, now that we're about 3 months past the failure of Silicon Valley Bank, and also specifically, what are the risks associated with commercial real estate as well as non-bank financials, and could you further elevate those risks with higher still rates, possibly for longer?
So we're trying to think where to start. I'll start with commercial real estate. We, of course, we're watching that situation very carefully. There's a substantial amount of commercial real estate in the banking system. A large part of it is in smaller banks. It's well distributed. To the extent it's well distributed, then the system could take losses. We do expect that there'll be losses, but there'll be banks that have concentrations, and those banks will experience larger losses. So we're well aware of that. We're monitoring it carefully. It feels like something that will be around for some time, as opposed to something that will suddenly hit and work its way into systemic risk. In terms of non-bank financial sector, there's been a ton of work, and clearly in the pandemic, it really was the non-bank financial sector where issues really arose, and there's a lot of work going on with the administration, in particular, leading that to try to address issues in the Treasury market and in all kinds of areas in the non-bank financial market. But our jurisdiction at the Fed is over banks, actually bank holding companies and some banks. So that's really our main focus. In terms of the events of March, as I mentioned earlier, we will be carefully monitoring that situation. Our job generally involves worrying about a lot of things that may go wrong, and that would include the banks. It might be hard for me to identify something that we don't worry about rather than that we do worry about. So we're watching those things very carefully. And as we see things unfold, as we see what's happening with credit conditions and also all the individual banks that are out there, we'll be able to take, to the extent it's appropriate, we can take, if there are macroeconomic implications, we can take that into account in our rate setting. And so I guess that's what I would say.
Can I just follow up on the last part? That's, do you risk further exacerbating those issues if you get up to another 50 basis points?
So that's, and I guess I meant to address that by saying, as we watch, we'll see what's happening, and if we're seeing the kind of tightening of conditions that you could be referring to, then we can factor that, because really we use our rate tool it really has macroeconomic purposes, so we'll take that into account. Of course, we have responsibility for financial stability as well, and that also is a factor that we're always going to be considering. Thank you very much.
So there we go. Fed Jerome Powell. I said it would be under 5 minutes, and it was literally 3.5 minutes.
I saw a couple reasons.
Excuse me. So there is the end of Jerome Powell. Now then, it's exactly as I predicted. I'm very happy with that today. I'm glad I trimmed off the top from the S&P. I actually think it's a little bit of theatre, and I'll explain what I mean by that. So let's discuss it now. So let's go over to the main portfolio. You can see we've just turned green again. I sold the S&P at the top. I think we're going to get a couple of days of volatility in reaction to this. I think, I want to make the point of Sensei said, Fed skips and maybe next time it's another rise. That's not what people expect. And he said people are expecting a pause. And I actually replied to that saying, hang on, I actually said it'd be a skip, then a pause and hold for 6 months, which is why I'm putting now money into cash. I think I can earn more money at the moment for the next 6 months. We've had a massive rally. We are in a bull market, no doubt about that, but it's going to be steady and slow for a while. So my strategy is this. I sold off the top last night, the S&P. That was the right thing to do. When it dropped, I didn't buy in. It wasn't enough. It wasn't worth it. Remember, I'm trying to use that cash anyway to pay for my computer. But I won't need that for about 2 months, the 56 days, because of the way it works. But I'm going to keep that money in my buying power and earning 4.65. What's going to happen now is I think that we've got this skip, and I think next month, July, we're going to have another meeting. And I think then it's going to be, I think it's going to be a pause or a skip again. I think Jerome Powell was trying to send a message that we don't want the market to explode. I think if we carry on as we are, slow, steady growth, and build up our cash reserves over the next couple of months, I think we're going to be golden. I think the rates are going to stay high for the next 6 months to a year. So you might as well build up your cash reserves, earn 4.65%, which honestly, I don't think you're going to make on the S&P over the next 6 months. I think you're going to make more money with no risk on uninvested cash. When the interest rates start coming down, then the bull market will really start to accelerate. Then I'll start buying more S&P. I think right now, with the balance I've got, leave it as it is. I think we're going to get some explosive action in the next couple of weeks with Virgin Galactic. We can trim there. We can make some money there because there will be a pullback afterwards. We can make some money there, load up our cash, start earning 4.65% and waiting. I think to me, listening, watching every single one of these presentations, looking at the body language, I think it's clear to me that we are in a bull market. I said in December, Bank of America confirmed yesterday, 2 days ago, that we are in a a bull market, I beg your pardon. And I think that was to scare the markets a little bit. We want a steady growth, not an explosion. And I think that we're going to get a pause or a skip again next month. And the rates are going to stay like that for a while. And the one thing that the market likes more than anything else is certainty. I think that's put certainty. I don't think we're going to have a crash. I don't think we're going to go into recession. I don't think we're going to see a massive rate drop. I think we'll see a bit of volatility. If my high-risk stocks make 20, 30%, I'll take some off the top. I'll load up my cash, build up my cash reserves. I don't think it's a time to buy anything. I think you should already be in. And I don't think it's a time to sell either. So I think it's a quiet period of time. Let's have a look at everyone's thoughts. I'd say it's being dragged to see the market response. Yeah. I would like to know which stocks Jerome Powell has. He has them all. S&P is going to 460. You think it's going down again? No, I didn't say it was going down again. That's not what I said at all. I said there'll be a bit of movement, but I think it's pretty much going to go sideways. I didn't say it was going down at all. Didn't say S&P was going down at all. I said if it does drop a little bit, I'll pick some up, but I don't think it's going to do anything. I think it's going to go sideways. And I just said I'm going to earn more money on my uninvested cash for the rest of the year. I'm going to start building up cash reserves, earning 4.65%, and then I think when things start to come down, interest rates start to come down, and there's no point holding my cash anymore, I think then it will start going back into the S&P. So I don't think the S&P is going to come crashing down. I don't think it's going to go up to 460 either. That isn't what I said. Anyway, that's my opinion. Skip, then pause, then this is already the pause. Well, no, a pause is very different than a skip. When they skip, it's because they are looking at the data. They're not putting their flag in the sand saying we are pausing rates. Pausing rates sends a signal. It's a language. It says we are pausing rates because we feel we've done enough. Skipping is not that. Skipping is simply we are going to wait and see. We're not going to pause. We're not going to hike. We're not going to cut. We're going to skip. That is very different than a pause. Don't regard this as a pause. A pause means we are done raising rates. A skip does not mean we are done raising rates. Very different. However, the Fed is trying to calm the markets. He doesn't want the market to explode. It's a bear trap. No more rate hikes market. That's what I just said. I said we would have a skip and then a pause. And then I think the rates will stay the same for 6 to 12 months. That's what I've just said. Europe is going to recession. Germany, it's on recession. I don't think the US is. Recession goes longer in Europe. I can't comment on that. I don't know. There we go. What's everybody feel like? So I was running a poll in my chat today asking for your help, and 62% said, no, we're not going to help you. That's nice, isn't it? I'm glad it's honest, though. AI is destroying live music, and it's making it impossible now for people to trend with their music. So I've recognized that. And I thought, you know what? I don't need to trend on YouTube. I don't need the algorithm to help me. I've got a family, loyal members. So the 38% that are watching it, that are going to support me, I know are my members here that have voted. I'm sure that's my members who have voted. Basically, music is being destroyed. Every day I bring out a world premiere. The world premiere is today. Tomorrow, it's going to be a big one. Tomorrow is the Piano Man. This is Big River today. There we go. It's in the chat. It's pinned to the top as well. Go and have a look. Go and have a listen. I've gone away from trending because AI is literally wiping the floor with everybody, creating its live music, creating titles that you can't compete with. So I'm now calling my videos Martyn Lucas Music. That's it. I'm not trying to trend it anymore. So if you want to find me, you'll only find me, and you'll only keep music live if you actually want to find me. It won't serve it to you anymore unless you are a subscriber of my channel and you want to watch it. Go into Google, YouTube, and type in Martyn Lucas Music, and you will find my songs. Because no one else is going to do that, right? No one else is going to call themselves Martyn Lucas Music. So I'm going to do that. And every day, after the 2 hours live streaming, I do a world premiere every morning. I go uninterrupted to you for 2 hours, take no breaks, and then all I ask is have a listen to my music. There you go. There'll be one tomorrow morning, 2 hours after the closing bell, the opening bell starts. We take a 7-minute break. We come back for the end of the show. And if you missed today's, please go and check it out. This is what it looks like. If you go to the Martyn Lucas channel, links in the profile, links everywhere. If you look on the video section, you will see Big River was today, Daniel was yesterday, and tomorrow is Piano Man. Once they've actually gone live, they go in date order. It's because these are upcoming. So Big River was today, Daniel was yesterday, and Piano Man will be right at the front tomorrow morning, 9:30. I hope you watch it, and I appreciate everyone being honest and saying, no, we're not going to watch it. There's nothing. You want an honest channel? You get an honest channel. 62% of everybody says, no, we're not going to watch it. We don't care. We want music to die, and we don't give a damn if anyone watches your music. There's nothing like it, is there? We can't duck and cover against AI, Martyn. We can. We can, because people are more powerful. We can. And we know that because 95% of my live viewers are members. And I know that my members will watch my music and we will survive. We won't need to trend. They will watch it. You know what happened years ago with the Beatles? People heard of the Beatles, they talked about it, and they shared it with their friends. They went below a video and they shared it. They sort of shared the music. They went round each other's houses listening to record players. They shared the music, and human beings shared it, and then they grew. That's what happened. That's how it happened. We've gone red again. That's how it happened. So I'm asking the very simple thing. When you watch the video, click share under the video. And I know that my members, 95% of my live viewers, will do it. Non-members probably won't. They don't care. But my members will. And we will survive, and we will fight back, and we will win. And music will stay live, and I'll bring you a live premiere every day. Every trading day that I'm doing this show. All right? And if people then don't do it, don't complain if all music goes away and live music stops, because it will. And not on my channel it won't, because my members are too supportive and too good. Right, so anyway, let's open up the broadcast lounge if anybody wants to call in. If you want to call in live on the show, here is members have the opportunity, and you are most welcome. All right. Okay, we got day trader of the day in a few minutes' time. What's your thoughts on it? What are your thoughts on it? Let me end this poll right now, and let me end that now. Audio's gone. Oh, is that when I went over? Oh, there you go. It's back. Sorry about that. Yes. What I was going to say was when you go over here to the video, click the share button underneath. That's what I meant to say. Yeah. Sorry, that's what I meant to say. Anyway, it's back. It's back. And gone. No, it's back now. It's all... There we go. I fixed it. Yeah. Just double checking we fixed it. Yeah, we're all good now. Sorry about that. What I said was go over to the video and click share. When my music comes out, click share. And I know that my members are going to do it because I've got the best members in the world. I know that. All right. Okay, let's go through all our positions. Virgin Galactic was in the air today. We're waiting for confirmation of what it was, but hopefully we'll find out. Virgin of what the flight was today. We know it was a test, but we're green again. There we go. We're green again. The overall portfolio is green. So, what does everybody feel? Everybody happy with the report? We've got day trade of the day in a couple of minutes. Virgin Galactic, Virgin Orbit, Rivian, Tesla. Didn't go cheap enough. Mullen's going to zero. Mullen is absolutely going to zero. Anybody in Mullen still? You can't short it now at 23 cents. And it's already had a reverse split. It's actually worth less than a cent a share. That is the worst stock on the stock market right now. There's not a stock worse than that. You can buy the entire company for 53 million. I mean, seriously, you can buy the factories, the cars, the staff, the work. It's not worth anything. It's rubbish. Someone tell the Virgin Galactic pilot we need another backflip. Yeah, that's right. That's right. Are you saying not to buy during a bull market? Why? No, because the bull market is just starting. It's very, very weak. A bull market is when the markets are up for 2 consecutive quarters and it's a positive sentiment. It's only just turned from a bear market. We are still in a very difficult climate. A bull market, there are reasons to buy in a bull and a bear market. In a bear market, see, I prefer the red days. I know everyone likes the green days. The red days is when you make money. When it's green days and everything just keeps going up, it just keeps going up. You don't do anything. Not really. I like the red days because the red days is when I go to town. It's when I go to work. It's when I start digging the ditches. It's when I prepare and I fight against the system and I lower my averages. That's what I do and I acquire because nothing goes straight down and nothing goes straight up. However, a bull market, what I'm saying is we have got a bull market sentiment beginning, but it's weak. So I've already got in enough. You always want cash for dips. So because we've got the last 6 to 12 months of these high rates, they're going to come down, take advantage of them. We've already had, and I'll explain more detail. Over the last 3 months, we've gone up nearly 12% on the S&P. The S&P does between 10 and 15% on good years on average. We've done nearly 12% in 3 months. That's like 36, that's 12, that would be 48% in a year if that continued. Are we going to go up 48% in 1 year on the S&P? Of course we're not. Of course we're not. That'd be ridiculous. Of course we're not. The economy wouldn't support that. Absolutely not. So what I'm saying is a bull market can also be hold your stocks. Don't get out. Hold your stocks, earn the dividends, reinvest, hold. Things long-term are always going to be up. Good quality stocks, not like Mullen and stuff like that. But other stocks are going to be up. Your main stocks are going to be up long-term. So enjoy a steady growth. What I'm saying is you're going to earn more money if you've got Robinhood or something like that where you're earning 4.65%. It makes sense because you want some cash. You want some cash for the days we get dips. For example, there was a famous incident on Amazon. It happened, I don't think it will show on here. There it is. There's a famous incident last year. Amazon went boom. Basically what happened was there was a leak of their earnings report. You've not seen any of our earnings yet, Cherry. We cover all the main earnings. It's when we sit and listen to the earnings. And sometimes the earnings get leaked. Whether it's up or down, they get leaked. And the stock goes 20%. Same thing on Netflix. Netflix came out, went down 20% or whatever it was. I bought, sold straight away. I made 20% in like 2 seconds. These things happen. So you want to have cash. If you've got cash sat on the side, earning nearly 6% with no risk at all, on top of you're already invested in the whole market and it's all steadily going up, you're getting your dividends, you're looking for the dips, you're buying the dividends, you're reinvesting the dividends, not automatically, that's lazy. Do it when it dips. Just don't, I mean, why do it automatically and always buy the top? Just do it manually when there's a dip. You're building up your cash reserves, and when you get these like alerts, for example, Tesla does it a lot. Tesla, just before the earnings, boom, it goes down, all right? You buy it if it's what you want, if the fundamentals haven't changed, but it's price action. So you always want cash. So now I think the market has had a massive pump so far this year. We're already up 14% on the S&P. Now it's time to build up some cash. Remember, do what everybody else isn't doing. What everybody else is going to do now is walk straight into a bull trap. Buy, 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 buy. FOMO, FOMO, FOMO. I'm going to get rich. I'm missing out. Don't be that person. Sit back and relax. You've already got invested. You've already made 14%. It's not going to go down. We might have a little couple of percent here, whatever, back up again. But we're going to be okay. The rate hikes are coming to an end, but it's going to hold now for a while. And I think the Fed being hawkish are basically letting you know that if we calm down and we don't plan for a rate pause, they'll pause. That's what I think is going to happen. Anyway, we'll see if I'm right, because I'll be live sitting here talking about it a month from now. So that's what I think. So for me, I'm going to hold my cash, and I'm going to build up cash reserves, ready for the dips, reinvest the dividends, and take away any risk, drama, stress, and just enjoy the fact we are where we are. If there will be a rate cut, will you put J. Powell t-shirts in your store? If there will be a rate cut, will you put J. Powell's t-shirts in your store? I should do that, shouldn't I? Yeah, it's a good idea. I might do a J. Powell t-shirt. I'll do a J. Powell t-shirt. I got dumped on. I don't know, something like that. Yeah, that'd be quite funny. 6 or 4%. What's 6 or 4%? The World Voslo, what's 6 or 4%? 4.65. That's the rate of Robinhood. Is that what you're talking about? Look, 4.65. Is that what you're talking about? 6 or 4%? I'm not sure what you mean. Anyway, we're coming to the end of the show. Thanks ever so much, everyone, for joining us. Has everyone smashed the like button? Did you all do it? We've got 81 likes. How nice is that? It's nice, isn't it? Should we see if we got any subscribers during the show? Shall we have a look? Did we get any subscribers? Let's have a look. How many people came through our show? We had 769 through the show. That's all right, isn't it? Let's have a look. How many? Did we get any subscribers? 440. We got 1. But we'd already had a roll round before the show started, right? 8,441. All right, that 1. All right, still counts. Still counts. 1 more. I'm happy. That's 1 person, a human being right there going, I'll subscribe, bink. Right, let's have a look at our stocks. Let's go through it all. Live Q&A now if you want to call in. The broadcast lounge is open. Is anybody in the broadcast lounge? Nope, nobody in there. Let me check my questions. Just reading a message here from Eric. Okay, message requests. I've got a message request here. I can only accept members. I can only accept friend requests from members. This is our friend from Russia. He's asking to be a friend. I can only do friend requests from members. It's because my members will friend my friends, and I can't friend someone who's not verified. I'd love to. I'm sure you're real. You are our friend from Russia every day. There he is on the screen. But I can only do it for members. Sorry, I can't. Because that's just our policy. You need to become a YouTube member. So I can't accept it for the minute. I'm sorry. It's just our policy, all right? I hate doing that, but I have to do it. I have to do it to protect my members. General chit chat. We got a mention here. Does anyone mention sticks that are making moves on here? Scott Beers. Does anyone mention sticks that are making moves on here? I don't understand your question. Sorry, mate. That's general chit chat from Scott Beers. Okay, we're still holding green. We're going sideways now. Not much to do. Just holding on. If we get any dips, we've got cash to buy it. But we're not buying anything unless it goes 5-10%. No point. I want nice big dips. Otherwise, I'm not doing it. Tesla, just holding it. If we get that down to $200, fine, I'll buy some more. Thank you for who you are and what you do for the people here. That's nice. I truly thank you. I truly think you are a genuine person. Thanks, mate. Where are you from? Where are you from? Where in the world are you from? Are you from one of our flags? One of our countries? What city and country are you from? Thanks, mate. Is that your little boy or little girl there? I can't quite see. A little bit small. Hello. Hello to your family. If you become a member, I will do, is that your daughter or son? I can't really tell. On their birthday, we would celebrate their birthday and do happy birthday. I'm the world piano man, and I'll go into my TV studio behind me, and I will do happy birthday for you. All right? You are a family member. People pay $500 for my video birthday or anniversary videos. You get it for free as a YouTube member, plus many other things. Okay, we've got 50 minutes to go. We're going to do day trader of the day. Here's the world premiere at the end. I hope Texas. Hey, I'm in Dallas, just down the road. Welcome to you. Yes, my little boy. Hey, well, if you become a member on his birthday, what's his name? What's his name? Let's give a shout out. What's your little boy's name called? Hard Hit an 81. What's your son's called? Is he watching? Is he watching? I'm going to find out now. What's his name? Hang on a minute. And then we're going to do day trader of the day. We've got a big cash giveaway coming up as well in a couple of weeks' time. Another great one. We had $100 last week. We've got a really good one coming up in a couple of weeks' time. So stick around for that. Let me just see if we can get the name of his little boy. Is he watching the telly right now? Hard Hit, and what you need to do, because you're behind the stream, you only need to be 5 seconds behind the stream. And what you do is you go to the video. You make sure that the video on mobile or a computer, make sure that grey button is live. If it's grey, you're behind the stream. Click live, right? And now you're about 20 seconds behind the stream because of the reasons what just take it is. Now what you do is click double speed, 2 speed, and now that brings you right up to date. Your 5 seconds. That grey button is live. If it's grey, you're behind the stream. Click live, right? And now you're about 20 seconds behind the stream because of the reasons just take it is. Now what you do is click double speed, 2 speed, and now that brings you right up to date. Your 5 seconds live. If it's grey, you're behind the stream. Click live, right? Now you're about 20 seconds behind the stream because of the reasons just take it is. Now what you do is click double speed, 2 speed, and now that brings you right up to date. Your 5 seconds live. If it's grey, you're behind the stream. There you go. So once you do that, you're literally 5 seconds behind the stream. So that's how to be up to date. His name is Braden. Hello, Braden. How are you? I'm talking. Is your dad a good dad? Is your dad a good dad? Well, we're going to make you famous now, Braden, because I'm just down the road from you. I'm in Dallas, in Texas, not far from you. And I just said to your dad, right, if your dad really loves you, on your birthday, right, he can get me and everyone here to sing you happy birthday and make you the most famous young man ever on the telly. Yeah, I can. See my TV studio behind here. I was voted the world piano man, and I go to my piano over there, All the studio lights up with smoke and everything. We put happy birthday on the screen like this, right? And we have fireworks. There you are. We got happy birthdays. We have all this stuff, right? And I will sing you happy birthday. If your daddy becomes a member of our channel, so ask your daddy, say, hey, daddy, you do love me, right? You do love me, right? And he'll go, yeah, of course I do. Of course I do, Braden. So there you go. It's up to your dad now. He's got to become a member of our channel, and then he gets a birthday. So anyway, Braden, when it is finally your birthday, just in case your dad doesn't become a member on our channel, all of us here are going to wish you happy birthday. But hopefully we'll get to celebrate it from the show. Anyway, wherever you are, Braden, tell your dad to get it sorted. All right? Brilliant. Oh, flipping heck. Shouldn't do that, really, should I? It's not right, is it? I'm a relief captain offshore and I'm at work. Doesn't matter. It doesn't matter where you are. Hard hitting. You could be anywhere in the world. Do you know why? Because YouTube's on your phone. It works anywhere. I never understand when people say it to me, I can't do it. I'm at work. I'm a relief worker. I can't do it. I'm at work. You can do it anywhere. It's global. It's everywhere. We got people in 18 countries. We got people up the Khalifa this week in Dubai. We got people standing on their head in Australia. It's doable anywhere. Don't you give me that nonsense. I can't be doing with it. I'm at work. We have people who watch us at work. Anyway, Queen of Cell Braiding is in Texas too. He says, I'm a relief captain offshore and I'm at work. I'm offshore. I'm always offshore. Never at home. Anyway, markets are taking a bit of a drop. We've got 10 minutes to go. It's time for day trade of the day. And that's how I watch you. On a mobile, on a phone. See? So on your mobile, on your phone, you click this button here, on your mobile, on your phone, go into the browser, and you can become a member. We've got people becoming members in all parts of the world. Mexico, Dominican Republic, Germany, Argentina, South Africa, Norway, Lebanon, Uganda, Canada, Uruguay, Portugal, Ireland, Italy, Turkey, Australia, UK, USA, and Chile. And they're all on a phone. I love it. Best job in the world, this. Right, there you go. There's the invitation to join. Don't be so bloody miserable. Get on with it. Sort yourself out. Fly the flag for America, all right? No, I can do it, but you asked if he was watching. Oh, I see. Oh, now he's backtracking now. He's going, no, I can do it. I wasn't going to. I can do it. I wasn't going to do it, but I got to do it now. I can do it, but you asked if he was watching. Right, well, this is what you do, hard hitting 81. This is what you do for your son, right? Look, I'm going to show you now what you do. Look at this. You're going to like this.
Peru donated 8 cents. I'm back. 0.00100000 LTC.
Unbelievable. Look who's back, everybody. Peru is back. He's just given me a tip. Well, guess what, Peru? We are now the most officially on YouTube, the highest engagement rate of any channel on YouTube. Mr. Beast has 8 to 9% of his live viewers are members. 95% of our live viewers are members. Higher than any other channel on YouTube. Higher than any other channel on YouTube. We're about to go live 24 hours a day. That's what we're working on now. And we are aiming to become the most honest, real YouTube channel on YouTube TV in the world. We have members now in 18 countries of the world. 95% of our live viewers are members. And it's higher than any other channel. Anyway, this is for you. Hard hitting. This is for you. Look here. See that button there? Clip. See it? You can click clip like that and you can save the moment I started talking about your son right there. And you can save it as a video. And then you can post it to social media. It's a 1 minute long thing. So it will start from when I started talking to Braden and then you can share it to all your family, and you can go, Martyn Lucas, the world piano man, right? Talk to our son, and you can share it all around the world, and there you go. And on his birthday, you can make sure that you're back here on the show.
Hard Hitting 81 has become a member.
There you go. See? He's done it. He's done it at work, offshore. Discard clip. There we go. Offshore, he's done it. He's sorted it out. That's another member. Can you make up a country? Because we need another country. I've got 18 countries, but you've already told me you're from Texas, so you can't say anywhere else. I need some more countries. We've got members in 18 countries. And I want a member in every country of the world. We actually go out in 14 languages as well now. So we're trying to... Our second biggest audience is in Russia, by the way. America is number 1. Russia is number 2, even though Russians can't become members. Because of the sanctions, all my Russian viewers can't become members. And then the 3rd is the UK. 4th is Australia. 5 is Korea. It's incredible, right? A lot of Koreans who watch our show. Anyway, that was Peru. And can you believe it? Peru's back. Look at this.
Currently, your channel is something unique that I like about, because you're helping people. You relay excellent information and real information and no hype at all. That's why I like your channel.
And since you've been gone, Peru, we've raised over $1 million now for our members on the music channel for our charities. Anyway, let's give Hand Hitting 81 all his benefits. We've got 5 minutes before the bell goes. We're still green. Let's go back green again. And Peru, this is the TV screen that you bought me. Look, see here? This is for people on TikTok. This is my TV screen here going out to TikTok. This is the I still use it every day to go live to everybody on TikTok. Anyway, Hard Hitting. You've got loads of benefits now. What you get is many things, including birthdays. We might have mentioned it. You can ask me to do a poll on a subject, I'll do it. You can ask me to review a stock, I will do it. If you want me to buy a stock and make a video on it, I will do it. You have to give me a super chat. So let's say you want me to cover Tesla. You want me to make a video on Tesla. You can give me a $10 super chat or whatever, and I will buy $10 of Tesla and then make the Tesla video and promote it and put it out. So basically, you can promote your favorite stocks if you want to do that. You are now able to see all our members' own videos. Talking about Peru today, we had a bit of a drama with Peru earlier in the year. As you know, we are the most honest channel on YouTube. That's what we aim to be. Here is our members only videos, and we actually did a thing all about what went on behind the scenes and everything with Peru. So all of that is here on the members only. So go and check out our members only videos. Only members can see those. We've also got access now. You can have exclusive content, live events, blah, blah, blah. Also, you get access to all our lifetime discounts of our services that are provided that are with a premium. For example, our sponsor is, we have 3 sponsors, 2 global brands, and we also have Sensei Crypto. If you use this discount code, Lucas AIDS, you'll always get a lifetime discount to any of Sensei's services. Here is the Discord, because you can now get upgraded on Discord to see all our private channels. Only members can see it. Here is the Discord. It takes 10 minutes to sign up, so go and do it now, and you can get signed up on Discord, and I will upgrade you once you've done it. I can't do it for 10 minutes. It takes 10 minutes to get through. I've been watching you for a couple of months. I'm just happy to support someone that is true in what they do and say. Well, I appreciate that so much. That is why most people actually become members, because I don't make videos. I don't make money from live videos. I'm trying to not sell videos. I'm trying to build an audience, and I'm trying to build the most honest TV show in the world. And it's the members that make this possible. Without members, I wouldn't earn any money. I only earn about $9 a day as it is. And you can go and check that on Social Blade if you don't believe me. So every word is true. So thank you for your support. I appreciate it. If you want to get on Discord, I've given you the link. What you do then is you go across to here. You go into the welcome all. And on the welcome all on the left-hand side, that's where you'll come into on Discord. Scroll to the bottom and you'll appear in here. And Eric B is already, look, he's already getting there, look, to welcome you in. It's called the Welcoming Committee. It's a bit dodgy, innit? The Welcoming Committee. Yeah, Peru's back. Mike's going, what? Yep.
Currently, your channel is something unique that I like about because you're helping people. You relay excellent information and real information and no hype at all. That's why I like your channel.
Anyway. So anyway, just thought I'd let you know. Yeah, that's shocked everybody, innit? That shocked me as well. Just checking my Dogecoin. I think Mike's sending me some Dogecoin. Because Mike's buying my drone. Right, so once you appear there, look, hello, Hard Hittin'. I like the name, Hard Hittin'. He's hard hitting, isn't he? I don't know what that means. Sounds good though, doesn't it? Anyway, the bell is about to go in 30 seconds. Here we go. Today's bell is sponsored by Sensei Crypto. Here we go. Today's bell is sponsored by Sensei Crypto. You can sponsor the bell for $10. This is sponsored today by Sensei Crypto. Is that Peru Invest? I believe it is. In 3, 2, 1. There you go. The bell has now gone. We're in the after hours and the market's going up. Great. I took my profits yesterday. We are very, very happy with that. And we're good. Okay. Is that Peru Invest? Yes. Do you know him? Have you ever heard of him? I don't think he's in the chat. He's being exclusive. He's not letting us know he's here. He likes to be secretive, which was part of our problem because my channel is all about being completely honest and transparent. And that's the only way we do things, okay? We don't do things, we don't do, what I didn't like, even though Peru gave some great tips, I didn't like the secrecy, I didn't like that. We don't do that anymore. We are now, I never did it, but that's what he did. And I don't like it. I want open and honest, the most honest, real channel on TV. The moment we start trying to be secret agents like 007, it's no good for me. All right. Yes, that was worth $10. Yay, that was worth $10. Are you being cocky? Are you having a laugh, Bill? He doesn't pay $10 every day. He's my sponsor. He pays $99 a month to sponsor the bell every single day, and for me to promote him. If you want to sponsor the bell for one day, you don't have to pay $99 a month. You just pay $10. He doesn't pay $10 a day. He pays. If it's Peru Invest, I know him from another server. Yes, he came on our show when I first started, and everybody loved him. However, what people didn't like is after a while, we felt we were being like, too much cloak and dagger, too much like, trying to control the show, and I can't have that. So, he decided to leave, and we parted terms. But for me, the show's about you. We aim to be the most honest channel on YouTube, and we can't have secrecy and all that stuff. That doesn't work for us. Anyway, thank you very much, Peru Invest, for the, what was it, 8 cents I think he gave me? Where was it? I can do a recent event. Here we goes. Here it is. This is what we had a few moments ago.
Peru donated 8 cents. I'm back. 0.00100000 LTC.
Yeah. Anyway. Hi, Nelson. Nelson Conglaves from Portugal. Welcome to you, mate. Lovely to have you here. Right, the bell has gone. It's time for Day Trader of the Day. So what we do now is we go over to members only. I'll be back in the morning with our third day of world premieres to fight back against AI. Tomorrow morning, it's Piano Man. So if you want to be the very first person to leave a like, leave a comment, here is the world premiere tomorrow. Tomorrow morning, this is the world premiere. Here it is. There is tomorrow morning's world premiere. It goes live 2 hours. I go live for you 2 hours uninterrupted. I take a 7-minute break. In fact, we made it 10 minutes now. I don't know why I keep saying 7. We made a 10-minute break. We all watch this, and then I come back to finish off with Day Trade of the Day and the final trades in the morning bell. There you go. And if you've not yet seen today's premiere, it was Big River, about the story of a decline in Newcastle in England, of a town. Go and check out today's world premiere. Right, it's now at the time. The markets are doing well. Everything's green. Thank you, Jose. Lovely to have you here. Let's do day trader of the day. Go to your main portfolio. Now, once again, I trimmed off the top. I took my profits. And if you see, we are now consistently up. We've been up now for the day, the week, the month, the 3 months, the year to date. You can see consistently up. If we go to the Roth IRA, we are consistently up on the day, the week, the month, the 3 month, the year to date, the 1 year, and overall. There we go. And that's all we want, is consistently up on all the accounts. And we are $49 away from our all-time high, which we set this morning. So we're very happy with that. And we now have $3,000 in cash, earning 4.65%. AI will reign supreme and is unstoppable. No man can overcome its reach. Mustafa, yes, we can. My members can. We are and we will. And I'm proving it right now. And do you know how I'm proving it? And I'll share with you why. Because AI now is making up false music, pretending to be artists that it's not, writing songs, looking for the trending search terms to get the algorithm to share its video content. People don't want that. They want real human beings writing real songs. However, those people can't find the real music because AI is taken over. So you're right. However, you forgot to remember that human beings with emotion and commitment, which is what I have on my channel. That's why 95% of them are live viewers are members, higher than any other channel in the world. These members help me. And these are real people. And every morning we release a new premiere. This is our third one tomorrow. And I guarantee you 100% this one will do more views than the one that yesterday did. And the one today did more than the one that did the day before. Why? Not because I'm using trending terms. I'm just using my name, Martyn Lucas Music. The only people who search for that are the people right here. And the people right here are watching it, liking it. Look, I've already got 4 likes. 4 likes. AI can't do that. 4 likes in like 5 minutes. People are already liking it. And then they'll click share. And you know what, Mustafa? People, human beings will come together tomorrow morning and they will watch and share my live music, which I make on my own, live, with no AI, no technology. I edit it live. As I make it, it's live. And I guarantee you 100% we will win. Because people around the world will go, hang on a minute, I want live and AI free, and we'll win. So the more you tell me we won't, the more we will. I guarantee it, because I will never give up. Your loyal members can't get you to 1 million views before the channel's birthday. So-called members. Yes, they can. Yes, they can. Look at this guy here trying to be negative. He's probably a 10-year-old kid in his back bedroom. He's not a member. He's pretending to be a sheik or somebody rich. He probably is nobody, right? So yes, we can. And we're going to do it right now. We are 2 weeks behind, folks. Can everyone, in fact, here you go. Watch this. This is to my members. Members, Watch this. AI can't do this. Members, can we get to 1 million views before birthday? Right? Before birthday. And that is in 12 days. I'm going to challenge you now, Mustafa. Positivity will always win over your negativity and your absolute commitment to destroying live music and AI robots is what it's all about. No, it's not. It's about human beings and people. You can't stop that. Members, can we get to 1 million before the birthday? Yes or no? Vote on that. Everybody vote on that. Right? And then I'm going to show you how we're going to do it. The only way we're going to do it, because we're 2 weeks behind schedule, we have to get 8,000 views every day for the next 12 days. And we can do that easily. We can do that. And this is how we're going to do it. Let's prove Mustafa wrong. This is how we're going to do it. I've created a shorts playlist. Here it is. It's got 1,000 views, 15 seconds each. Click on that. Right, click on that shorts playlist and let it play. That's the shorts playlist. See that, look? It doesn't count if I do it. Open a tab when this show finishes. There are 39 of you watching. If all 39 of you click on that, because you care, you're not a robot or an AI, you click on that at the end of this video, we'll have 39,000 views in the next sort of 2 or 3 hours. And we'll prove that Mustafa is wrong. All right? So, your loyal members can't get you to 1 million so-called members. All right? Well, we'll see. Eric says we're going to do it. Rough down 0.27. If we all loot, we can do it. Yes, 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 yes. If we all do it. Yes, we can. There's another one. Mike says yes, we can. Yes, we can do it. Christopher says yes, we can do it. Stephen Lewandowski, shorts, we can do it. That's 4 people. Looks like you're wrong, Mustafa. That's 4,000 views in the next few hours, mate. Right. Now, I've got 44% saying yes because I've got some people here who aren't members like you, and you're going no. But the negative stuff will always lose. I promise you that. Take it or leave it. Believe it or not. I don't care, because I know the power of the people that watch this show. It's nothing to do with me. It's my family that makes the difference. Right. Okay. And on the birthday in 12 days' time, I will drink myself into oblivion celebrating it. If not, I won't. But we'll see. The day trade of the day, is it gains or losses in your value on shares, or is it your profit? It's your profit or loss overall in your overall balance, not individual stocks. You can't just have one stock like I buy Binky Bonk coin and I'm up 3,000%. It's your overall portfolio, your largest portfolio. If your largest portfolio is you're off, you're off. If your largest portfolio is your brokerage account, it's your brokerage account. Whatever it might be, it's entirely up to you. All right? It's entirely up to you. Looping all night long. Yes, we can. Octavio. Screw it. Let's do it. Crag, oh dear. Mustafa, you're getting crushed. I tell you what, this is what I love. This is what I love. If you're able to face up to the negativity, the trolls, the bullies, the liars, the scammers, do you know what? You just become even stronger. All of their hatred and their negativity, you absorb it, you squash it, you turn it into energy, and you throw it straight back 10 times harder. And I believe that. And I believe that all my life. You have to be able to take it, and the negativity actually makes me stronger. It's funny because you think they'd learn and give up. You think they'd learn. 2 years ago, when Peru started watching the show, him and others said, you won't be here, you'll give up. In a bear market, people that started YouTube channels all gave up. And they did. I said, I won't. And they went, yes, you will. I said, no, I won't. How do you know? Because I've been the world piano man for 37 years. I've toured the world. 195 countries, which is every country of the world. I know it's a lot, but I have. And I'll never give in. And I'm not a YouTuber. I'm an entertainer building a family. And that is not what YouTubers are. YouTubers are, 1 minute they're working in a job. Next minute, they make a video on YouTube, get a bit of success, call themselves a YouTuber. I'm not. I'm an entertainer. I've entertained millions of people around the world. And my job now, because I can't tour anymore because of my back and COVID, and that killed it, is now building the most honest channel in the world. And that's why I will never give in, and that's why we will win, and we'll have the best YouTube channel TV show in the world, even more than Mr. Beast. They laughed at Mr. Beast when he said, I'm going to be the biggest YouTuber in the world. Now you're laughing at me because I'm saying I'm going to be the best YouTube TV show in the world. Well, guess what? We're going to do it. Not because of me, because of my audience and you trying to spread negativity. I love it. Carry on doing it. The more you do, the better it is for me. Okay. Day trader of the day. Let me see if anyone's doing it right now. Let me go to the channel right now and let's see if anyone's doing it right now. Yep. Everyone's doing it, Mustafa. Look. There we go. Look. This is my views right now. See it starting to spike up? These are all the shorts. 3 views, 2 views, 2 views, 2 views, 2 views, 2 views, 1 view, 1 view, 1 view. All the way down. All the way down. Look at that. All being watched. All being watched. We need 8,000 views a day. That's 8,000 over the last 48. We've got to double the rate we're doing to get to 1 million views by the birthday. And let me show how close we are now. This is how close we are. All time. Lifetime. Okay. There you go. Lifetime views on the channel. 928,000 views. 928,000 views. Okay. So we've got 72,000 views in 12 days. 72,000 views in 12 days. All right. Polls don't lie. Yeah. This is probably Peru, by the way. Polls don't lie. So it's all about numbers, is it? It's all about numbers. People don't count. People don't count. Just numbers on a screen. Well, I think you're going to be wrong. I think you're going to be wrong. And you know why I know it? Because my family won't let me down. Anyway, day trader of the day. Here we go. I was speaking to the person who holds the world record for visiting every country in the world yesterday, coincidentally enough. Oh, yeah? What did he have to say? If life gives you lemons, drink tequila. Just went to every short and watched. You can't have watched every single short. You can't have watched everyone. There's about 1,200. Christopher, click on, all you got to do is click on that playlist I just given you, right, and let it run through. You can't click on the whole lot. You can't watch the whole lot in 5 minutes. He said, I just went to every short and watched it. All right? Anyway. Why anticipate 1 million views if numbers don't count? It's just a bit of fun. It's a bit of fun. It's excitement. It's a bit of fun. It's something to work towards, something to get excited about. That's why. Don't have a target. I do have a target. Tell Mustafa to shorten his name. It's not his real name. He's not a Mustafa and he's not a Sheikh of Arabi either. Right, let's do day trader of the day. Sure we can. In driving but listening, I'm in. 6,000 views per day to get to... Is it 6,000 a day now, is it? Is it? Thank you for working that out. Is that all it is? 6,000. 6,000 views a day. Bloody hell. There we go. Pablo's doing it. Pablo's joining in. I'm listening in. We're going to do it. I can afford more letters than you. Of course you can. Yeah. Tell Mustafa to shorten his name. Don't realise there was over 1,000. Yes. It's a playlist. What are you talking about? Look, it's a bloody playlist. What are you on about? Hang on a minute. We got to do day trade of the day. Look, it's a playlist. Can you see here? Yeah, that's how we're going to get the views. See on the right-hand side? Look, 1,083 videos. 1,083 videos. And then you can loop it as well if you want. Let it run through. Prove to Mustafa that we can crush his negativity. Easy. Right. Didn't realise there was 1,000. Yeah, I watched the first 3 and then came on for a round of applause. No. This is commitment, Christopher. And what you could do is mute it and leave it running. Just leave 2 or 3 devices running. Your phone, your iPad. Just leave them running. 24 hours a day. That's what my guys do. 6,000 times 12 days equals... thank you. It's a lot, isn't it? 6,000 every day for 12 days. But there's 1,000 in the playlist, and you can get through the 1,000 in about an hour. So, 12 people watch it for an hour. 12 hours, done. Okay, I've got my laptop set up with it on. There you go. Boom. Boom. Stick that in your pipe. Right, here we go. Day trader of the day. This is a members only. So enough of Mustafa now. I've had enough of the negativity. I can't take it anymore. It's bringing me down. It's destroying me. So members only in 5, 4, 3, 2, 1. Only members can comment now. That's it. Right, here we go. Day trader of the day. This is my position now. Mustafa said he can afford more money. That's why he's got a long name, but he can't afford $2.99 as a member. Up 0.25%. There you go. Up 0.25%. Put a minute on the clock. Let's see who wins. Your overall portfolio. Hello, family. Hi, Eric. Here come the members. Here come the army. Here come the army. Right. Up 0.07. I'm in the lead. I'm up 0.25. Sam Connery's trying to cheat again. He does it on Facebook because he can sneak in round the back door. I'm not going to do that anymore, Sam. I can't share you on the screen because then we'll get Mustafa trying it and we'll get Peru trying it. They'll all be coming in on Facebook trying to cheat. We're not having any of that. Let's go looping, the Queen of Self-Rating. Oh, look at this. Up 3.3%, but only on an account. Hey, the money has nothing to do with it. Forget what Mustafa said. You got to have money to be important. You haven't. If you're up 3% on $10, $1 million, it's the same thing. Congratulations to you. It doesn't matter. Don't ever say I've only got $1,300. The fact that you've got that you live in America and you have fresh water, education, food in the cupboard, and a job and healthcare means you're 95% richer than everybody else in the world. There are billions of people who would love $1,300 to invest. There's billions of people who would love $1,300 to live on for the year. So don't be worried about that. And I know because I've been to those places. So congratulations to you, 3.35%. And that means you are the winner. Thanks for your honest trade. Give him a thumbs up. And here's a round of applause. Oh, the Queen. The Queen came in at 7.6. Congratulations, Queen. You came in a second too late. The time had run out. So I'll still give you a round of applause. But Queen, you know the rules. You've got to be on time. Be on time next time. All right. Time to roll the credits. So everybody, click the playlist of the shorts. Here is the link. If you lose the link and think, well, how do I find the link then? I don't know how to find the link. This is what you do. You go to the YouTube channel. Right here. There are all the videos that come out in date order. The playlist. Click on the playlist. Scroll down to the bottom. Scroll down, scroll down, scroll down. Scrolling, scrolling, scrolling. And the bottom right-hand corner. There it is. See it? The shorts playlist. There, look. The shorts playlist. Play all. Click on the play all. And then click the loop. See it? Right there, look. Let it loop all day on 3 devices. Your phone, your iPad, you name it. Just let it play on mute. If you want to like a video, that's fine, but you don't have to. All right? They're all in order of coming out, but it doesn't matter. It's not about that. It's about getting 1 million views. All right? Okay. I'm always at work. Sorry, Queen. Sorry you've got to go to work. That's just life, innit? Don't come on and use that as an excuse. Right, here we go. Let's roll the credits. I've got to get out of here. Whoops. I'm back. Sorry about that. Sorry about that. Okay, here we go. Here's the credits. Don't forget our catchphrase. These are all the stars of the show. I think Peru's on here. He is as well. Peru's on here. Stars of the show. Donor, Peru. Richest man on our channel. Gave me 8 cents. Love it. Thank you, Peru, for the 8 cents. It goes straight back into the show. Subscribers, Joanna Kwan. Michael Jackson joined today. Chelsea S. And Hard Hittin became our latest member. We have 102 members now. 95% of our live viewers are members. That's it from me. Take care of your money. Take care of your crypto. Take care of yourselves. Get looping right now. Let's do it. And each other. Bye-bye for now.